in their New Caledonia nickel mines. Now, don't ask me to put it into a map. I don't know where that is. But the point is that this is something that was weighing on their balance sheet a bit. We'll see if that actually helps. We are about 8 seconds away from the European Open. Again, there's a lot going on here. And just as we kind of come out of the gates, we're going to see whether or not this optimism in futures is actually going to stick. The FTSE 100 now officially open, and the opening bids are marginally positive, but big emphasis there on marginally. Simply this idea that as we see the S&P 500 close at 5,000 on Friday, can the European session hold on to it? Already you're seeing, again, not that major exuberance, that optimism that we were really expecting right out of the gates as we're getting some of these opening prices. Your biggest weight this morning on the FTSE 100 is actually AstraZeneca. You're seeing some of the energy names as well weigh on the index as a whole. Tom, this is really interesting as we're kind of waiting for some of these other indexes to open. Healthcare, energy seem to be on the back foot today.
Yeah, energy as a sector currently down 0.2%. That may be largely down to what we're seeing in terms of the softness coming through from Brent and WTI. So just giving you a check on the pricing there as you kind of tie that into what's happening across the energy space. So down 0.5% on Brent, 81.73. WTI at 76.42, down 0.5%. There have been some suggestions from reporting around Bloomberg that maybe some comments from Iranian officials over the weekend about potentially diplomacy having some progress when it comes to the conflict in Gaza moving forward. That may have pressured oil prices. Certainly oil prices down just a little bit, but still at 81.72 on Brent. Energy then as a sector, as you rightly so, Critty, the biggest loser as things down 0.2%. And interestingly, real estate at the top of the list, gains of 0.8% for real estate. You've also got construction, travel and leisure, and the consumer all performing between 0.5 and 0.8%. You said it's going to be relatively muted. That's kind of what we're seeing. Gains of 0.3% across the benchmark so far, but some little interesting stories when you lift the hood on a sector-by-sector basis.
Yeah, let's talk a little bit about the micro here, because what's interesting to me is one of your top index contributors, and given we're only less than 2 minutes into the opening trade, so anything can happen, one of your top movers this morning is L'Oreal. Remember, this comes back into the earnings we saw last week. They actually had some weakness there, really talking about how the Asian consumer isn't holding their weight conditionally. The CEO now doing another interview saying they're expecting to beat the market growth of 5 to 6%, saying that the China market still remains relatively strong, even though there is that reticence to spend after the pandemic, saying they're going to double down on their investment there. This morning, you're seeing the shares pop by about 1.5%, contributing about 5% to the index gains you're seeing on the stock 600.
And I should build out the energy story as well, because we talked about the fact that's one of the main losers across your sectors. Of course, the biggest loser so far, at least in the session. Galp, listed in Portugal, is a big contributor to the downside there, down 2.7%. They've come out with some earnings, so we'll look at that in more detail as well. Mixed fourth quarter results, the EBITDA missing, but revenue and adjusted net income beating for Galp, but disappointment from investors in terms of their reaction to that energy story, at least for now, currently down 3%. Now, with a relatively quiet day ahead, this Monday, investors are focused, of course, on key CPI data from the US tomorrow, the data print really of the week. Traders have pulled back from some of their rate cut bets after Fed officials hammered home that they are going to be patient on the timing of a first rate cut.
It would be a mistake to move rates down too soon or too quickly without sufficient evidence that inflation was on a sustainable and timely path back to 2%.
Gratified to see inflation coming down, hoping it continues to come down, and I think we've got some time to be patient. If I could get these kind of numbers sustained and even better broadened, that's what I'm looking for, sustained and broadening.
It feels like the economy's been quite strong on the growth front. You got big jobs numbers, you got big GDP numbers, better than expected. But at the same time, we've had inflation better than expected, too.
Okay, joining us now is Dan Scott, head of Vontobel, multi-asset. Dan, good morning. Thanks for joining us this Monday. What is the potential risk, surprise risk, coming through from the CPI out later this week, out of the US, across these markets? How much is priced in? Are you braced for a surprise? Or do you think that the steady trajectory on lower inflation, headline inflation, and core inflation is the story that will continue?
Yeah, look, I think the trajectory on inflation is clear. We've seen it's come down, and what's very obvious now is that real rates are just too high. So whether we get a move sooner or later and how steep the move comes down is the question. But very clearly for us, rates are coming down because at 2.5%, real rates are very restrictive. The thing is that the Fed can afford to have a tight monetary stance at the moment just because the economy is running so well. So I think, if anything, the risk to markets is that they stay high too long and don't cut soon enough, because eventually we are going to feel the pain. I think what's confusing for people is that we've had a two-speed economy. I mean, what was really weak, what was definitely in recession in the Eurozone and was also in a recession in the US, was manufacturing. And the services were keeping everything afloat. Manufacturing is now starting to pick up again before services has really cooled down significantly. So you have this two speeds even within economies that's creating some sort of a confusion on the headlines.
So Dan, does that mean you have to rethink your counter-consensus call that there will be a US recession in the, what, are you saying near to medium term? You have to rethink that view?
Yeah, so we keep pushing out that recession call.
That's helpful, just to be able to kick it out.
Right, we keep pushing it, pushing that recession call out. But no, for me, some people in the market look back and there was a period when we were all worried that inflation was going to be like in the 1970s. We'd get a second wave. I never bought that. What I did buy was that this is very similar to the dot-com bubble. There is a mass of excess liquidity in the system. Even now, we still have plenty of excess liquidity slushing around the system. You see it in Bitcoin prices and other assets. And we've had then a repricing in 2022 of like the unicorns. And you also had something like, 7 economist covers that were predicting a bursting of the dot-com bubble before it actually did burst. I think it's going to take some time until you see these higher real rates have an impact on the markets. We saw it in the regional banking crisis, which was then just plastered over with even more liquidity. And now what you see is CRE really starting to buckle. And I think last time we were on the show and last time I was on radio with you, Critty, we were talking about CRE and how there is potential danger coming our way on CRE. It's really starting to present itself. We've seen the first bankruptcies, and we're going to see more, because as that refinancing comes close, need from the lenders comes closer and closer, you're going to see NPLs start spiking higher. You're going to see some of the lower quality of the market start to default. The bond market is in euphoria. I mean, I get no spreads whatsoever on investment grade. That's not normal.
Oh my God, you've thrown so much at me there. I don't even know where to begin. I want to go back. Well, I want to come back to the bond story in a second, but you made some historical precedents, some historical comparisons. Dot-com era, the 70s here. I'm a history major, so we've got to nerd out for a second. Why are those the comparisons that are being made? And you're not alone in making them, as opposed to the 80s where defense spending was growing substantially, or the 60s where you had the nifty 50 kind of changing the narrative. I understand that liquidity is very different than it was 40, 50 years ago, but I'm curious why that's not the narrative, as opposed to this kind of over-exuberance that you are now saying is in the bond market as well. Some would argue that if you're looking at a yield of, I want to say 417, 417 on the 10-year yield, that's not exuberance. That's a market that isn't taking these rate cuts seriously.
Well, so the 4 handle on the 10-year is something that I struggle with too, but, we're overweight government bonds because we think that is going to come lower. It's going to come down below 4, and that's why we're positioned in the 10-year. I think it's clear. There's so many moving parts at the moment. What I think we do know is that there's a slowing in macro momentum. We've seen it. That is, evidenced by the data. And you are going to see, because inflation has come down to 3 already, you're going to see cuts in interest rates. Whether it comes now, whether it comes in 3 months, how fast it comes down, that's the question. But it is coming down for sure. And then when you talk about bond markets and how people are positioned, but also equity markets, I think both are very similar in that people want safety. So they're positioned in quality. And I think that's where we have a consensus in the market. I think we all know that likely some parts of the market are going to go pear-shaped. And so in equities, we want quality. And how do we express quality? The Magnificent Seven or the granolas. Why?
Yeah.
Because they have strong balance sheets. CAGR on the granola is what, 7%? So I guess 7% revenue growth, but a strong balance sheet.
Yeah.
That's nice. I'd say the only problem with the Magnificent Seven is that 4 of them die, right? If you watch the film.
This is a dark take, Dan.
So
This is a dark take
was
for Monday
Tesla
morning.
number one? Who's going to be El Chapo?
So many questions. We're supposed to be the ones interviewing here. Talk to us about this bond market, though. You said you can't wrap your head around a 4%. What should the 10-year yield be at right now?
Well, so again, timing is one question that's very difficult. As a multi-asset class investor, I'm looking for risk diversification. I think the 10-year should go down to 3%. So once it hits there, or maybe just before, I'll likely take profit in my overweight govies. I'm hoping by that point I get some spreads in my high yield. I get some compensation for taking some risk in investment grade, and I can reposition more into investment grade.
I got to interrupt you. You said overweight govies. That means I'm trying to work out what the range is here. We keep popping up again, 417 on the 10-year yield. What is the floor in yield if there is this kind of insatiable demand, which may not be showing up now, but will eventually if you have these rate cuts priced in? Because it feels like we're hearing over and over again what you're saying, that there's this demand that it doesn't make sense. That's 4%. How low should yields be going? How low can they go?
Well, again, so on the 10-year, we expect it to hit 3%. So looking for yields to come down to 3%.
Within what time frame? 3%?
Oh, within 12 months for sure. I mean, I'd be very disappointed if I was here.
3% on the 10-year within 12 months.
Yeah, if I was here again, if you invite me back again, if I'm so lucky, within a year, and we're still trading with a 4 handle, I'm going to be pretty disappointed with my positioning for sure. And it's a similar situation in equities. There's a lot of excess liquidity and safety seeking there. 6 trillion in money market funds. That's a reason why at the same time as being overweight govies, i.e. a defensive positioning in the bonds, I'm overweight U.S. equities because there's just a lot of liquidity to support this market.
So come on, be the El Chapo then. Do you carve out Tesla from the Magnificent Seven? What proportion of that 6 trillion goes into the Magnificent Six then, ex-Tesla? Do you do an ex-Tesla then?
Oh, I think eventually there'll be a broadening of the market, and then going back to the Nifty 50, right? We like to seek historical parallels in order to give ourselves a playbook on how markets are going to unfold. So I do think that you are going to see a broadening of the market. It's inevitable.
Do you like small caps? Because they've underperformed on the earnings front.
I like small caps, but I don't like them now. So there on the timing, I'm willing to take a wager. I think now is too early for small caps. Back to my discussion about spike in default rates, I think with 45% of the Russell 2000 not actually making a profit, it's a little bit early to be seeking exposure to small caps.
All right. I think we've got to leave it there. There's so much you just threw at us. We're thrilled to have you back. In about 12 months' time, if the Treasury yield is not at 3%, we're going to say, I thought you had the El Chapo thing down. Dan Scott, head of Vontobel Multi-Asset Strategy, we thank you so much. In the meantime, I want to get a quick check of some of the individual stocks on the move. Joe Easton monitoring that for us. Joe, walk us through it.
So we're currently waiting for a price on Todd's over in Milan. That was a potential takeover at €43 a piece by the founding family and Le Catterton, backed by LVMH. I was looking at the pre-market indications. It was looking like it could be up as much as 20%. We've got a big unch on the screen here, meaning it's in a volatility auction at the moment. So we'll wait to see if we get a price potentially in a few seconds on that one. Then in terms of the other M&A we've got out this morning, there is a couple, as we mentioned, in stocks to watch. In the UK commercial real estate space, the warehouse merger, this news confirmed in a statement a few moments ago. Tritax is going to buy UK commercial property REIT. That was at a decent premium of around 11%, but the stock only up around 3% at the moment. Potentially some concern that might not go through, or maybe people holding out for a better offer, but Tritax coming down and at UK commercial property coming up a bit. One we haven't touched upon is over in Spain. There's comments in El Confidencial from the Banco Sabadell boss saying he could be interested in doing a tie-up with Unicaja, based in sunny Malaga, my favourite city in all of Spain. But that one is rising 4% at the moment for Unicaja. People taking those comments pretty seriously this morning. So lots of M&A going on this morning. Then in terms of renewables, we'll take a look at Nordex. As we said, that one actually missed on some margins, but Analysts saying the headline sales better than expected, around 2 billion euros. That's more than analysts had forecast. And we're also seeing Siemens Energy gaining this morning. They've got an upgrade at Banco Santander in terms of a ratings change. Traders telling me there is another ratings change on that one, but I'm going to wait till we get that on the terminal before confirming. And we're seeing a little bit of positivity in Vestas and Ørsted as well. Ørsted actually has a downgrade over at Redburn this morning. So lots going on in renewables at the moment, but the big one is Nordex, up around 4.6% at the moment. Then in terms of your morning calls, very excited about NatWest earnings coming up. I've been banking with them for years, and they kick off the banking reporting season on Friday. Potentially, net interest margins are coming down. We know that costs could potentially be too high. That is the view of KBW that goes underperform on that one, and it falls 1.2% at the moment. And then Deliveroo, the food delivery company, is initiated with a buy at Deutsche Bank, who say the premium subscription model where you pay a fixed fee for deliveries is going to boost that company up 2%. And the producer has just told me in my ear that we got a price on Todd, so I think we're going to flash that up if we can. There we go, 17% for Todd on a potential takeover by the founding family, with a bit of LVMH involved in that as well. So rocketing there for Todd's over in Milan, up 17.2%.
All right, Joe Easton from our equities team, we thank you so much. That's 17% gain in Todd's. I mean, this is coming in. Let's just look at this. 42.60 euros. The takeout price, I believe, was 43 euros a piece. At least that's coming from, I want to say LVM or El Catterton, excuse me, which is backed by LVMH. So again, I'm curious if there is some sort of diversion. Usually when you see an LBO like this, it doesn't actually hit the takeout price this closely. The spread seems pretty narrow here.
Okay, so with the bid, expected, so this is a take-private bid, of course, as you mentioned, El Catterton joining forces with the founding family of Todd's. The valuation that they put then on the back of this deal, 1.4 billion euros to take this business private, El Catterton backed by LVMH, and the view then that they can do some longer term planning seems to be the take around this business. Of course, the maker of these leather driving loafers, but the premium in there is 17.2%, 42.62 as you say, Critty.
Yeah, and we should talk about what the expectation of this deal is. The Della Valle brothers, currently owning a majority of Todd's, aiming to keep that 54% holding even after this deal actually goes through. El Catterton, on the other hand, would be getting a 36% stake after spending about 512 million euros. LVMH retaining about 10% of the deal. So that's how the math all works out. We're going to keep you apprised of the move. It looks like starting to pair a little bit of those gains, but still higher by about 17%, Tom.
Okay, coming up, we're going to take a look at some of the other big earnings in Europe this week, including car makers being challenged by the competition from China. That is next. This is Bloomberg.
There's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere.
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
This is Markets Today. We are 19, almost 20 minutes into your Monday European trading day. As you can see, green on screen, a little bit of equity enthusiasm as well. We'll wait for clarity on the earnings story and the macro data with a focus, of course, on US CPI on Tuesday. Let's get to more of a deep dive, though, on the earnings look ahead and bring in Sam Umstead from our Markets Today blog. Sam, before we go to Sam, we're going to cross over to April Roach, in fact, for that earnings preview. April, thanks for your patience. What can we expect then from, let's start on the favourites of Kriti Gupta, which is the drinks makers, Heineken, Pernod Ricard, even at 8:20 on a Monday morning. That is where Kriti is focused on her attention. What should we be thinking about when it comes to the drinks makers? Is this a margin story? Is it a consumer story? Is it a volume story? Is it China? Where are you going to be looking?
Good morning. Yes, so for both Heineken and Pernod, it's going to be a consumer story. For both of these companies, this quarter will depend somewhat on the strength of their Asian markets and also the popularity of their higher-priced premium brands. Analysts are actually expecting Heineken to fare better than its French peer due to that lower exposure to an uncertain Chinese market. And we saw last year that Heineken had a bit of a recovery in the Americas. However, it still needs to see more of a rebound in its key Asian markets like Cambodia and Vietnam, which account for nearly 30% of its operating profit. Meanwhile, for Pernod, it's expected to report a first-half revenue across all regions that is lower, and that is due to excess inventory and also consumers restricting their spending. But for both of these beverage makers, we're really looking to see how they will fare in the face of that faltering consumer confidence in Europe.
April, give me a second. I got to address these drinking allegations. What is your drink?
She's got the lawyers on the case already.
I'm ready. What is your drink of choice? I'm curious.
Old-fashioned? It's got to be. I mean, it's a bit of a cliche, but an old-fashioned. Yeah, as a cocktail.
As
red wine, otherwise just like deep, heavy.
As a young man like yourself, I did not think you'd be into an old-fashioned. But I'm a gin and tonic kind of girl, and that's what I want. And I want to know who makes all the gin.
Was that before you came to the UK, G&T?
Yes, it was always. I've learned that I don't get hangovers from gin and tonics.
Okay, that's cool.
And for some reason, I do everywhere else. I'm sure April is an expert on this stuff. I just had to clarify because he keeps talking about my drinking as if I only drink. But I also pay attention to car makers, April, and that's where I want to go next. Talk to us about the EV space. What are we expecting on that front this week?
Yes, so Stellantis and Renault faced quite a tough quarter on the back of that wavering electric car market and also due to the advance of Chinese rivals. And we know that Renault recently cancelled IPO plans for its Ampere unit, which in part shows the challenges amid that slowdown in demand. And Stellantis as well has been facing some speculation about a potential merger, though we should note that the company's chairman, sought to kind of tamp down any speculation in that space. We also have French car parts manufacturer Michelin due to report this week. And Michelin's actually expected to benefit from a rebound in the replacement tire market. And that rebound should help the company combat some of that cost inflation and weaker volumes in tire volumes. Yeah.
April, what in the airline maker space? I mean, we've been focused on and reporting very heavily around the challenges of Boeing and all the safety and quality issues that aircraft maker is facing. Is Airbus obviously a beneficiary, or are they facing other challenges that maybe investors will be thinking about as well as we lead up to their earnings?
Yes, so Airbus sold a record number of planes in 2023 and surpassed its annual delivery target. However, Airbus, as you said, is facing some supply chain challenges, and this is expected to weigh on its fourth quarter margin despite that increase in commercial deliveries. It's also not expected to benefit as much from an increase in market share due to the issues, as you flagged, that Boeing has been facing. And that's because orders are likely to be split across those two companies as they continue to face backlog delivery issues.
Okay, April Roach with a preview of the earnings story this week. Thank you very much indeed. Comprehensive in terms of the preview. We're going to be speaking, by the way, to plenty of those companies, including the CEOs of Stellantis, Renault and Airbus. Really important interviews on the earnings story. Joining us, as well as the CFO of Commerce Bank and plenty more.
All right. Sam Unstead is, of course, going to be monitoring all of those interviews very, very closely. He joins us from our Markets Today blog to talk about a little bit about the macro as well. We just talked about the earnings picture. We're going to go kind of into the nitty-gritty with those. But let's talk about this bond market here, pulling back on these rate cut bets. I'm still confused about what this Treasury market is doing. We just had Dan Scott come in and talk about how 4%, a 4 handle on the Treasury, does not make any sense. Sam, make sense of it for us.
Well, I would say what you're seeing is a kind of slow acceptance of where the Fed is saying everything is going to go and where markets were at the start of the year. So
what a British thing to say.
It's true. You know, I think not just here, but in bond markets in Europe and in gilt markets too, you're seeing traders just cool off those positions. Although I would say, you know, we're going into a week of a lot of data out of the US, out of the UK, and there is still a disconnect between what markets think and what the Fed is effectively saying via the dot plot.
What is the read across to other assets then, Sam, if we do get lower yields, if we do get more work towards that 3% level that Dan Scott flagged for us? That's his view, of course, by year end. What are the connections to other asset classes?
So I think in particular for stocks, you've had an earnings season where expectations have been fairly low. And so that has kind of translated into companies that beat expectations not really getting a huge boost, but companies that miss getting punished quite hard. And the other thing you've seen a lot in earnings season is cost cutting. Cost cutting, management, really assessing how well a management is doing. If they're investing in the right brands, improving profitability, that is kind of helping those stocks. If you then add to that a picture of more expectations that rates are going to come down, and sort of a cohesion between what the market is saying and what central banks are saying, that could kind of give stocks a little bit of an extra leg.
Sam Unstead, thank you very much indeed from our Markets Today blog. And of course, you can get more from Sam and the rest of the team on the front page of the Bloomberg UK website or by typing TLIV GO on the terminal. Kritty, I just wanted to pick up on what's happening in the oil space, because currently you are seeing, we moved into the session before the equity story, seeing a little bit of pressure on oil, but now Brent is down a full 1% at 81.38, $76 a barrel on WTI, down 0.9%.
Yeah, and you're kind of seeing a little bit of cross-asset trade here as well, because you're seeing a little bit of a bump in the Bloomberg Dollar Index, Euro Dollar, now negative, barely negative, but negative. 107 is where we're at there. So again, it looks like there's kind of a macro trade at play. But in terms of some of the headlines that we're watching, we did see the Saudi energy minister say that they could tweak their OPEC policy at, quote, any time. We're going to bring you those developments as we get them. Coming up on the program, we go right back to the geopolitics. Donald Trump causing a little bit of stir. We're going to get into it. Stick with us. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community. When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
This is Markets Today. We're about 30 minutes into the European trading day. I had my suspicions at the European Open of whether the green on the screen would hold. It looks like it is. The stock 600 higher by about 0.5%. We're digesting along. We've got a lot of earnings coming up this week. Car makers. You, of course, have some of the luxury drinks makers as well. In addition to, of course, Airbus. We're going to be watching that later this week as well. Not to mention all of the geopolitics. But when you're looking at today's trade in particular, what stands out to me is that some of your worst performers on the stock 600 are actually your tech names, your ASMLs, your SAPs.
Yeah, whether there's a bit of profit taking on that front. But every single major sector now on the SOX 600 this Monday in positive territory. Even tech, which, as you say, is gaining the least amongst the main sectors that we look at across that benchmark, up just 0.1%. Healthcare as well, one of the favoured picks amongst many of the strategies to come onto this show, just up a little over 0.1%. Top of the list, though, you have real estate soaring so far in the session, up 1.7%. That's as we look at yields lower across the European space, between 1 to 2 basis points. Looking at the UK, 10-year, for example, at 4.05, yields down about 2-3 basis points. Over in Germany, yields down as well, 2 basis points. And then, of course, you have the deal-making stories that are coming through, the earnings stories, and then the macroeconomic data that we continue to think about. Let's have a look at the sectors then in a little bit more detail. As I said, real estate at the top of the list, 1.7%. Interesting that energy is still posting gains as a sector, up 0.3%, despite, as we flagged just a couple of minutes ago, the pressure that's coming through across the oil space. Brent at 81.60, down 0.7%. WTI 76.30, down 0.3%.
Yeah, a really interesting dynamic there. You're talking about the oil space. We've got our eye on luxury as well.
Yeah.
Todd's, for example, although not a part of the stock 600, up by 70%, trading at about 42 euros and change there. The buyout price is about to be about 43 euros. And again, getting a little bit of LVMH's stake in what's meant to be, well, I guess this is the future of loafers. I don't know. I feel like this is more your arena than mine.
Possibly, Gritty, in terms of the soft driving loafers. I don't own a pen. But yes, this is apparently about them giving, look, it's around $1.4 billion or so that the market, or at least the value of the brand as a result of viewed by this deal. And the idea is it gives them more time to plan and invest around the future. So that's the Todd story. As you mentioned as well, the delivery companies really jumping at the top of the stock 600 as individual stocks. Just Eat up 7.5%, Delivery Hero up 5.2% as well. Of course, those pandemic companies that done so well during the pandemic, then they saw a lot of losses in the years following the pandemic. Now you're seeing a little bit of upside so far in the session. Siemens Energy as well, interestingly, up around 5%.
For me, it's the Glencore story that's catching my eye. You mentioned the energy component as well. Glencore, in particular, talking about getting rid of some of their stake in a New Caledonia mine, a nickel mine that has been weighing on their balance sheet for quite some time. it looks like they are going to kind of divest that stake for a little bit, but something that's being pretty well received by investors this morning. You're seeing a move higher, about 1.4% on Glencore, but I like to look at the index contribution. You can find it on MOV Go on your Bloomberg terminal, higher by 16% when it comes to how much of the contribution is happening to the index as a whole for the FTSE 100. We've covered a lot of sectors here, Tom. One we haven't talked about is defense. And this is an interesting one. It's not necessarily moving the dial that much in today's trade, but this is something that we're not actually seeing priced in yet. We're talking about this massive amount of aid to Ukraine, to Israel, these comments on the geopolitical front as well. We had Dan Scott earlier. He was making kind of historical comparisons. And to me, I'm wondering, at what point do we get kind of a revival of the 80s? If we do have a Republican president in the White House in 2025, to what extent does that kind of kickstart some sort of defense era 2.0?
And as Ros Matteson was saying to us earlier on Bloomberg TV, there's been a lot of rhetoric around this from the likes of President Macron in France on the need to build out sustainable defence systems in Europe, but that hasn't always been matched by the funding, despite the risks on the doorstep, of course, in Europe with what's happening in Ukraine. And of course, we've been hearing from President Trump as well on the issue of defence and particularly NATO.
Yeah, and I mean, let's just go right there. He caused a little bit of a political storm on the back of those comments when it was on actually the campaign trail over the weekend. Take a listen to what he had to say.
I said, you got to pay up. They asked me that question. One of the presidents of a big country stood up and said, well, sir, if we don't pay and we're attacked by Russia, will you protect us? I said, you didn't pay? You're delinquent? He said, yes, let's say that happened. No, I would not protect you. In fact, I would encourage them to do whatever the hell they want.
President Trump there talking about what that kind of doomsday scenario may be. Look, this is not a new piece of rhetoric. This is not a new line. Ros Matteson was telling us earlier. He has said this even during his time in the Oval Office. He's talked about the concerns around where American kind of funding is actually going. He's obviously removed a lot of funding from UN organizations, for example, during his time there, among many, many others. He thinks NATO is kind of part of that cohort where it's the United States isn't getting in return what they are ultimately paying for. But I think from a European perspective, there's a question of, okay, well, hypothetically, in a Trump 2.0 scenario, where does European defense come from, if not NATO?
And to some extent, he was spot on in terms of the contributions previously when he was the president, in terms of the contributions coming through from one of these members in Europe around NATO, not hitting that 2% of GDP. Yeah. And particularly with what we've seen in Ukraine, a reminder of the need for Europe to spend on defence. And it hasn't been doing that to the degree it needs to. But then when you hear the cheers and the audience reaction, there's something quite visceral about that. He's saying he would essentially let Russia off the leash to do, quote, what the hell they wanted to do. Yeah. Given what we know about what Russia has done in Ukraine, the massacres in Bucha, the idea that people in that room standing behind the president would be cheering that on, for many, will be deeply shocking.
Yeah, and I think something to kind of that's important for an international audience. And although I agree with you on every single point that you've made here, from a domestic point of view, they're not as close to the conflict. They're not seeing this in real life. It's not covered as much by the media as it used to be, say, on the onset of the war itself. There are a lot of questions as well about America's finances right now. And that's why defense spending, not just to Ukraine, but to Israel as well, is causing these massive divides, not only in the GOP, but in the Democratic side as well. You're already starting to see divisions about whether or not President Biden, who is allied with a lot of European allies, is kind of allocating that money correctly and working in the right spot with that, especially when you're seeing $60 billion of aid from the EU being prioritized to Ukraine. You are not seeing that kind of spending and that kind of commitment coming from Congress.
And look, this isn't a conversation that's going away anytime soon, is it? As the Biden administration tries still, and the Democrats and some Republicans, to get that aid through for Ukraine and Israel, of course, on Capitol Hill. Coming up later today, we are going to be speaking to Germany's Finance Minister Christian Lindner, as well as the GOP presidential candidate Nikki Haley. So some really interesting points to put to her, of course, on this particular topic. Those are two conversations you do not want to miss. Now, Ukraine has been saying that Russian forces are increasingly using Starlink terminals on the front line. Kyiv says intercepted conversations between Russian troops in the occupied Donetsk region indicate they had Starlink devices installed for internet access. Elon Musk's Starlink says it does not activate in Russia and doesn't ship to it.
And sticking with kind of the Ukrainian, the NATO story that we were just talking about, NATO's newest member, Finland, has elected Alexander Stubb as its 13th president. The former prime minister won just over 51% of the vote in a tight election. Stubb's presidency comes as Finland integrates into the defense alliance, which it joined last April in the wake of neighboring Russia's invasion of Ukraine.
Now, Donald Trump's trade war with China frayed economic ties between the two global superpowers, of course, but as the former president rallies support for a second term in the White House, his plans risk cutting trade ties with China altogether. For more on today's Bloomberg Big Take on this subject, let's bring in Sophia Horta-Acosta from our Markets Today team. Sophia, we know that the tariffs were put in place by Trump on, what, $360 billion worth of Chinese goods flowing into the U.S. market. We know that President Biden has not unraveled most of those tariffs. Now Trump is threatening even more. So what could it do to trade between these two nations?
Morning, Tom. So Bloomberg Economics is modeling that it could bring trade essentially down to zero. I was covering China when Trump 1.0 was taking place, and 2018 was really when the tariffs were hammering sentiment. And the difference between Trump and Biden, Tom, is the kind of the rhetoric around it. Trump was a lot more vocal, sometimes tweets in the middle of the night around what he planned to do in China, and that was an erratic approach, which really kind of threw volatility into Chinese markets. Biden's rhetoric was different, but the key thing is that the approach hasn't really changed. There was a little bit of an expectation that Biden would soften his approach towards China, but being anti-China in terms of an economic, seeing it as an economic competitor and perhaps even an existential threat to U.S. policies. That's become very, very bipartisan right now. So we did call it Trump's trade war at the beginning a few years ago, but now it's no longer has that Trump moniker, right? It's expanded to tech. It's expanded to investment flows between the two countries. So it's this is a policy that will come to China, whichever of the two candidates wins the U.S. presidency.
Sophia, what do we know about the specific policies that the Trump administration or the potentially incoming Trump administration, at least Trump and his team, are drawing up at this point?
So he has announced 60% tariffs on all Chinese imports. Now, we don't know whether that would actually translate into policy because, as much as Trump did actually follow through with his anti-China rhetoric and policies did result from that. It's unclear whether that would happen. He's also looking to expand that beyond just tariffs. We know that under Biden, there's been restrictions on Chinese techs and Chinese tech access, and it's the thinking is that Trump would go along with that as well. But again, whether what Trump was quite transactional under his presidency, and he did announce things and then kind of struck trade deals with China throughout his presidency. That's something that Biden hasn't done. So whether he continues that approach were he to win the U.S. presidency, that's still unclear. But viewed from Beijing, China isn't really waiting to see what really happens, whether Biden secures a second term or whether Trump comes back, because it's very clear that the competition between the two countries, the two superpowers, isn't going away. So viewed from Beijing, reinvestment into Chinese technology, that's likely to continue as well. But again, under Biden, that hasn't really changed, and it's clear that ramping up this rhetoric is a vote winner, Tom.
Well, Sophia, to your point, the fact that some of these tariffs hadn't actually changed under Biden, it also took a while for them to even be imposed during Trump 1.0, as you put it. I'm curious if he does act on this 60% tariff story. One, how much of a difference will it actually make to two markets, two economies that have been largely separated from each other since his last presidencies, largely, I don't want to say fully disconnected, but certainly less connected than they were previously? And at the same time, why is it something that the markets, economists aren't taking seriously just yet?
I think that's a really good question, Chrissy. So it's really difficult to model how U.S.-China tensions impacted sentiment, impacted business behavior. that reshoring narrative that has really kind of ramped up during the pandemic. Well, the one thing we can model, and Bloomberg Economics has modeled, is the impact of Trump's tariffs. And we know that had they not been in place, the difference would be about 160 billion worth of Chinese exports to the U.S. And in terms of markets, in 2018, and that's really when Trump's trade war ramped up in China, the CSI 300, and that's the mainland stock index, it fell more than 25%. And now Chinese markets are not in a good place right now. This is not good timing when you think about what China is already dealing with domestically. The economy is very much struggling. Domestic demand is already weak. Markets are tumbling, and Xi Jinping is trying to has appointed a new securities regulator to try to revive sentiment. So China is not in a good place right now, economically speaking, and from a markets perspective.
Yeah.
And this would be another thing to add to already weak sentiment. I do think markets, it's just a bit too early to be pricing this in and to be trading this. But markets in China are definitely not in a happy place, Chrissy.
I mean, I think that's pretty clear from the rounds and rounds of stimulus that we've seen that haven't been very stimulative to begin with. Sofia Horta-Acosta from Bloomberg's Markets Today team, we thank you so much for that crucial context. We're finally getting to the part of the show I've been waiting for 2 whole hours. The Kansas City Chiefs winning the Super Bowl in overtime. We'll discuss that, take a closer look at the amount of money involved. And of course, we got to talk about Usher, all of that ahead. Stick with us. This is Bloomberg.
What are you most worried about in the global economy now? Is it the geopolitical environment, U.S.-China, Ukraine? Is it inability to pass the debt limit extension? What are you most worried about?
I think most of the time I would answer the same way, a financial crisis. As a human, I worry a lot about the Chinese invading Taiwan and World War III coming on. But in that case, I don't think whether you invest with David Rubenstein or Cliff Asins is the really big issue. So I think a financial crisis I worry about because they're very unpredictable. After the fact, everyone predicted them. But before the fact, they're not very predictable. I don't think anyone wants a financial crisis. You think you'll do well, and something happens that boomerangs, and you don't.
Well, as we talk, we've seen Silicon Valley Bank basically go under and have to be bought. And there are other banks that have some challenges. Are you worried about a banking crisis or not so much?
Worried enough to put it on my worry list. I have no special knowledge of banks, commercial real estate and banks that deal in that, maybe a more nerve-wracking place, how that shakes out in cities. So, yeah, those things worry me, but not especially more. I think even before SVB, I would have said financial crisis is a very low probability. When someone says their biggest worry, doesn't mean they think it's likely. It means they think it's possible and would be terrible.
DOJ or other authorities
could face bigger challenges next.
Fed was going to keep reading World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
incredible season for the NFL on CBS. We set the high watermark for ratings since the property returned in 1998. We set the all-time record for a divisional playoff game. And to your point, we set the high watermark for ad sales for a Super Bowl. And it's looking like on Sunday, we'll set an all-time viewing number with any luck.
Those comments, the Paramount Global Chief Executive Officer speaking to Bloomberg on Friday about his expectations for last night's Super Bowl. It's finally here. We get to talk about it. The Kansas City Chiefs becoming back-to-back champions. It's after they beat the San Francisco 49ers. It's only the second ever overtime game in the tournament's history. Now, I will say, I did not watch it myself, but I am excited to talk about it because there is actually a pretty big business read-through. I want to bring in two folks who have some pretty interesting takes on it. Lionel Laurent from Bloomberg Opinion joins us, as well as Bloomberg's Charlie Wells. Charlie, I got to talk to you first. We know who won on the field in terms of the corporate space. Notice I'm not talking about Taylor Swift yet. Talk about the read-through here. Why do we care from a money perspective?
Right. I mean, we just heard about the high watermark for viewership. I mean, there's been huge expectations with this, and it seems like they sort of blew past some of those expectations. You know, would Taylor Swift show up or would she not? Could Usher, you know, who dropped a new album last week, could he bring in new audience figures? Last year, you know, was a record for viewership, and the expectation is that this year will be as well. So the NFL really, you know, seeing some benefit here as well. But I think, you know, another player here was sports betting. And since 2018, when the Supreme Court deregulated sports betting nationally, you know, that has really exploded in America. Now about half of the population in the United States can bet on sports, which is really interesting. And, you know, in 2022, we saw commercials about crypto. 2024, we saw Tom Brady in a commercial about sports betting. So yeah. I'm picking up on a theme here.
Stick with us. Lionel, I want to bring you in here because this was a column that you had written about last week as well. Last week, a big conversation on the show was just how much of the gambling and sports betting industry actually comes from right here in the UK. Flutter Entertainment, for example, doing quite a bit of work on this. Talk to us about, from your perspective, this was meant to be kind of the big blowout for gambling. It was in Las Vegas. Did it pay off?
Yeah, I think it did. I think the symbolism of this taking place in Las Vegas, apparently this was the first time, because Nevada and Vegas have had such a connection with casinos and gambling, that for a long time sports did not want to be associated with that. Now we've had deregulation. We're seeing so much legalization in the US. I think half the population has access to legal sports betting. This was a kind of homecoming for gambling. And the fact is that marketing spend, you mentioned the ad spend there. What's interesting is that there's been such a marketing blitz in recent years that actually now companies are starting to dial it down, to tone it down. They don't need to spend as much as before on sports betting ads because this has now become so normalized that everyone can see it, everyone can access it. Most people are doing it. So I think this is a kind of part of a global gambling boom picture since COVID. You know, the comparison to crypto is very apt. I think it's going to keep on going.
Lana, is this so? This isn't the high watermark then, in terms of the gambling play around sports betting in the US. I mean, where does this industry go from here? How much more growth is potentially in the docket?
Well, I mean, it's a bit of a mixed picture, right? Because historically, when you have waves of deregulation for gambling, you often get social costs, right? Because there is a cost. People get addicted, you get problem gambling, you get risks of corruption. So you always have a kind of boom followed by a regulatory backlash or a surprise. I think we're really on the cusp here. I think there is clearly a lot of pressure on US states to get in more tax revenue. And it's the same thing around the world. You know, Europe is just seeing now big mergers happening in the space, companies getting bigger. So I think from a pure population perspective in the US, we're at the halfway point. I would just caution that you often get, as in the UK, you get a backlash when this sector becomes too big because it does have social cost.
Okay, so maybe a bit of a backlash as we possibly see a tick up in things like gambling addiction, those kind of things. Charlie, talk to us about the role that the home of US gambling, Vegas, has played in hosting this tournament as well, and what that tells us about Vegas, Nevada, the tax take. Is this the new sporting hub of the US as well as the gambling hub?
Well, Vegas hopes so, and this really was a big win for the city. So this was their first Super Bowl ever, and actually when you think about it, Vegas right now has been pulling in professional sports teams from across the country, and it kind of calls to mind, I'm a Californian, and this sort of thing was happening in Southern California in the 1950s and 60s. As the population was booming, they were trying to gain national prominence and bring in, teams from across the country, and it's looking like this was very successful for them. We're seeing here in Vegas as well, the consumer still very willing to splash out. So if you think about the average price of tickets to the Super Bowl, it was $9,815 for a single ticket. So you think about that, you think about how much people were willing to spend on hotels. Some of those higher end hotels, consumers were splashing out on over $1,000 a night for some rooms. So that is going to spell a lot of tax revenue for Vegas, and a big win for their future vision. They've spent about $7 billion trying to turn the city into an international sporting hub, and it's looking like they're having a lot of success.
You mentioned the Southern California thing. It happened in New Jersey as well. There's a lot of questions about how European companies, again, are going to come and kind of mobilize on that front. And to your point, Nevada is one, Miami is another that we're watching. And then the legalization around that is all very crucial. Charlie, we didn't even talk about Taylor Swift.
Yeah, you can't go through this whole segment.
I know.
I
have to say, I was about to tag, and I was going to say, no, we got to ask him about it. Taylor Swift was supposed to be kind of the hot shot of the NFL for a lot of reasons. Some said even overshadowing Usher, dare I say. Didn't really feel like that happened this time around. 30 seconds, your take.
Yeah, I mean, they didn't pan to her too much, but I would say, one interesting theme here was kind of surprises with couples. So we, of course, had Travis and Taylor. We had Usher, a surprise appearance by Alicia Keys in that performance. And you saw, couples, in a lot of the ads as well. And I think that speaks to the fact that, advertisers were trying to reach different demographics. Women, about half the viewership for the Super Bowl last year. And so that is my hot take on Taylor.
If Guy Johnson was here, he would be like, he's our Taylor Swift correspondent.
Yeah, this is news to me. That
he's
the
been
big
talking
Swiftie.
About this all week. Well, you're a little bit of a Swiftie too.
I've got tickets to go and see her when she comes to the UK. There's a quite endearing picture of her giving Kelsey a nice hug. He's all battered and bruised, and they're having a nice hug. But also the beer chugging. One of our producers is pointing out she had slammed a beer cup down after having a move at the chugging competition. There we go. Charlie Wells, thank you very much indeed. With all things Super Bowl, of course, Lila and Laurent, in terms of the gambling part of that story as well. From Bloomberg Opinion, worth checking out, of course, Lana's pieces on that.
Yeah, I think it's really interesting, though, that we're talking. I mean, we're joking, obviously, about Taylor Swift, but there is a real inflation read-through here, and that's the point that Guy Johnson makes. I'm channeling him as he's on vacation. But he's kind of talking about, we're talking about the read-through, the economic read-through into Nevada. The Taylor Swift read-through on the U.S. economy is something that was quoted in Federal Reserve white papers. It was quoted by central bankers around the world. Simply this idea that the concert price tickets between her and even Beyonce is something that feeds into the wealth effect, and yet here Tom McKenzie is contributing to the inflationary problem, buying tickets to Taylor Swift.
Well, that is, in order to ensure that my wife remains content. Now, the other sporting story of the moment as well, over on the African nation, worth noting that Ivory Coast, the hosts, came from behind to beat Nigeria in that final. The final score was 2-1 to Ivory Coast versus Nigeria, of course, in the African Cup that completed over the weekend. European markets, currently you are seeing gains of 0.3%. Critter. US futures, S&P E-minis, NASDAQ futures are flat ahead of the CPI print tomorrow.
Yeah, a lot to digest there. A bond market that isn't seeing a ton of liquidity off the Asian session, but 417 on that 10-year. Stick with us. Plenty more ahead. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. The former U.S. President Donald Trump sparks concern among NATO members, suggesting he could abandon them if they don't meet defense spending commitments. Israel conducts strikes on the city of Rafah in southern Gaza, where over 1 million people are taking shelter, as President Biden urges the Prime Minister Netanyahu to shield civilians. And traders look ahead to U.S. inflation data out tomorrow that will help shape the path ahead for the Fed. Now, also coming up in today's program, exclusive interviews with the Prime Minister of Kosovo and Google's EMEA Business and Operations President. We talk, of course, AI. Now, let's take a look at the European markets map. Now, a lot of the focus after the week that we've had is going to be on real estate. If you look at European stocks, overall, edging a little bit higher, maybe the FTSE, nothing to write home about, pretty much unchanged. If you look at the optimism over eventual interest rates cuts from the Fed, again, investors looking forward to a crucial update on U.S. inflation. So they're taking all of that into consideration. Earnings season still underway, and then some of the things that they're looking at is really the rate sensitive, for example, real estate stocks leading some of the gains in Europe, oil companies laggards amid weakness, for example, in crude prices. So we'll have a full roundup of everything that you should look out for in markets. Of course, the big story is also the rally that we saw on Wall Street on Friday. For all of this, we're joined by Net Hechler-Feiderb, Lombard Odier's Chief Investment Officer for EMEA. She's also the Head of Investment Strategy, Sustainability and Research. Nanette, as always, so good to speak to you. When you look at the catalyst for a lot of these markets going forward, what do you see the main driver for them?
Francine, to start with, we have to simply take stock of the fact that the likelihood of a recession in the United States is going to be a very important driver. And all the signals that we are getting at the moment is that this likelihood is receding. That is very important because it sets the stage for equity markets in the current context of disinflation and when central banks are cutting rates. So these are clearly the main drivers at the moment, quite a constructive setup that is shaping up for the US economy, this scenario of landing, and then the disinflation that is going to allow the Federal Reserve and also other central banks to cut rates, I think is going to absolutely give us opportunities in fixed income as well.
So, and as you say, some of the main themes, of course, in equities is these falling yields and these, the risk of a recession getting smaller and smaller. Is there a danger, though, that we're too optimistic on the path forward for following inflation?
The US CPI is going to show us, I think, more of the same, which is that core inflation is still going to remain higher than headline inflation. So the good news are going to come through headline inflation still coming down, but there is this stickiness that is going to be absolutely reflected by core still exceeding headline inflation. And in that context, Francine, I think we have to make way for the fact that the Federal Reserve will want to see a bit more of these reports that are gradually going to get core as well into an area that they feel more comfortable with, certainly the direction of travel that they feel more comfortable with. So we would anticipate the Federal Reserve being in a position to start cutting interest rates probably in May of this year.
Nanette, are you worried about real estate? I know we've seen it, be a concern in some of the smaller U.S. banks last week and the week before, and starting infecting also places in Europe.
I would say the following. There is always, with a business cycle, also a credit cycle. And that credit cycle absolutely has an incidence on real estate as a sector. For example, in our sector strategy, in equities, we would be underweight REITs at this moment. After all, the higher yields that we have reached over the course of last year is representing some headwinds for certain real estate. But from there to take a view on, is real estate in a place where it could jeopardize the soft landing scenario? We don't think so. We are still very constructive on the U.S. economic outlook and see growth in the U.S. probably average around 1.2%, something like this in real terms this year.
So when you mention actually fixed income, what part of the yield curve do you want to be exposed to? And does that also extend to European countries?
Francine, this is really an excellent question, because the yield curve in the United States and in other markets has been negative, inverse, for such a long time now. And it was very deeply inverse with, for example, 2-year yields exceeding 10-year yields in the US by around 100 basis points back in the summer of last year. And this has now reduced to only 30 basis points. In other words, the yield curve is on a normalization course. It is still some distance away from getting normal and positively sloped. In other words, for long-term yields exceeding short-term yields, but we are on that course. And as we proceed in this normalization, there will be a case for lengthening duration. Right now, as I said, 2-year yields have come closer to the 10-year level, and we will be certainly monitoring the duration very, very attentively as a function of the yield curve in these spreads with a bias to lengthen.
And Nanette, I know we're only in February. There's a lot of elections coming. How does that play out into your thinking as we get into the extremely crucial European elections and then U.S. and others? I think 50 countries are going to vote this year.
It is a dense electoral year, and by far, most of the public attention will probably focus on the U.S. elections. In the U.S., there is going to be certainly a very different scenario depending on who eventually wins the presidential elections and leads the White House. But in in collaboration, of course, always with what and how Congress is going to be set up. I think the interesting point is perhaps to think about the scenario of a change in the White House. And with, for example, Donald Trump as a lead candidate for the Republicans, if this was the scenario, then I think we ought to be thinking about what it means in terms of the foreign policy, but very much includes tariffs. What is the stance of the United States on tariffs? That is going to be very critical for the rest of the outlook in 2025. But also in terms of the labor market in the United States, the stance on migration, whether this is going to impact, in particular, wage inflation, and therefore has to be a scenario that needs consideration as far as the inflation outlook and central bank outlook for 2025 is concerned. And then there's simply the future course of geopolitics altogether. So I certainly think that geopolitics continue to play an absolutely critical role in terms of setting also the scene for financial markets and investment strategy this year and the year after.
Nanette, thank you so much for joining us today. What a perfect way to get us started on a Monday morning. Nanette Hesje-Faidab, Lombard Odier's EMEA Chief Investment Officer. Now, coming up, Kosovo is facing heavy criticism from the U.S. and the European Union for blocking the use of a Serbian currency in the country. We discuss what it means for stability in the Balkans in our exclusive conversation with the Prime Minister of Kosovo. That's coming up next, and this is Bloomberg.
There is no digital without chips, and I emphasize that because everybody speaks about the digitalization of the world. And I would even go a step further. There is no Green Deal without chips. So yes, it's a bit like the new oil for the world. And given some of these geopolitical tensions, especially between the US and China, it's become a necessity, I believe, to be more resilient against these geopolitical tensions. And while finding it out the hard way through the past 2 years during the pandemic, and what I mean with the hard way is that we've all seen how key industries in Europe and the US, especially in the industrial, medical, and automotive sectors, have suffered from a shortage of semiconductors.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
Well, the worst diplomatic tensions between Kosovo and Serbia in more than 2 decades are under further pressure from a currency dispute. In a heated meeting at the United Nations last week, Kosovo defended its decision to enforce the euro as a country's only currency. But Serbia, the European Union, and the US have heavily criticized the move, saying the regulations may disrupt payments to ethnic Serbs. Now, the Prime Minister of Kosovo, Albin Kurti, says the new rules are non-negotiable, and he joins me for an exclusive conversation. Prime Minister, thank you so much for joining us. us. This certainly has made a lot of your allies very alarmed on what happens next. We've had criticism from the US, we've had criticism from the EU. You've refused to back down. Is that your final word?
Central Bank of Kosovo made this regulation, so it's an independent state agency. It's not a decision of our government. And it was not made in January this year, but in December last year. Preparations were going on, and everything was going smoothly. Precisely out of success for preparing for this new regulation, Belgrade has set an alarming tone with intention to cause ethnic tensions. Just like we have switched from car plates KM from Milosevic time to new RKS, we're going to do
Prime
this
Minister,
as well.
I mean, the concern is that a lot of people that you really rely on, your partners in the EU and the US, have taken this out of provocation. I mean, they say you're cracking down on Serb minority in northern Kosovo. You surely could call the central bank and say, like, politically, this is not a good thing. Let's reverse this.
I cannot do that because we are a democratic republic and independent state agencies are not subjugated to the government. That's why we're going to do a smooth transition. We're going to do a hotline where Serbs can call and complain for whatever is not okay according to them. But we cannot reverse this decision. So they asked for more time, and we're giving more time. And even our American and European partners now are saying that regulation is legal because it's fighting terrorist financing, illicit activities. But we should not be too hasty in like absolute implementation. And this is what we're going to do throughout this month of February.
Prime Minister, Kosovo is also preparing for municipal elections, right, in the north, which local Serbs boycotted last time, leading to the unrest that we saw in May. How will this, concerns with the currency affect those elections?
We have been giving social benefits payments to all Serbs of Kosovo who are our citizens. I'm not only Prime Minister of Albanians, even though Albanians are 93%. We have 4% who are Serbs. And thousands of families and tens of thousands of individuals receive payments in euro. We are not banning dinar. We're just formalizing it. We're just making things legal. Regarding these elections in the north,
they can't use dinar. So if you don't ban it, but they can't use it.
They can have dinars. And there are 10 commercial banks in Kosovo where, as means of payment, they can exchange into euro. Dinars were our currency during occupation in previous century. Since liberation in 1999, we had first Deutschmark, German mark. Then from 2002, we had euro.
So, Prime Minister, what is your end game with Serbs in the north?
Well, we want them to integrate in the society, and vast majority of them have done so. They have Kosovar ID cards, they have Kosovar passports, they work together. The problem is not Serbs of Kosovo, the problem is autocratic regime in Belgrade, which is a Russian proxy. It's a client regime of Kremlin. And they are doing this pre-apocalyptic alarming in inciting ethnic tensions because they want to cause troubles in the Balkans.
Prime Minister, so how do you see the integration? What does that look like? You talked about IDs. How do you see it more concretely?
Almost 3 years ago, I won on this ticket of jobs and justice. I believe that justice integrates people, fairness in the institutions, social justice, and also court justice. But on the other hand, we are also providing jobs for people despite their ethnicity. Employment in Kosovo, in comparison to 3 years ago, increased by around 18%. And that's why we want all communities to benefit from the economic growth of Kosovo, which is over 6% of GDP in average in these last 3 years.
Prime Minister, a number of international backers, of course, have already withheld aid because of some of your actions. Will you continue to do this despite economic repercussions?
I want peace and security, but I want peace and security through democracy, through rule of law, and through constitutionality of our republic. So I'm not going to give up on one for the sake of the other.
How will you replace missing funds?
We are giving all our like financing programs and social benefits, healthcare grants for education, for pensioners, for retirees, to all Serbs, just like we do for the Albanians. In addition, they receive from Serbia some payments, and they can do that because Serbia can send dinars, but in the ATMs, they're going to receive euros. There will be this exchange from dinar to euro. We are not going to have any kind of punitive measures. We don't want to punish anyone. We want to help Serbs. I'm Prime Minister who wants people to have more money, not less money. And I think we're going to come out victorious from all this crisis, which has been caused by Belgrade, not by local Serbs.
But Prime Minister, there's an understanding, right, amongst international institutions that what you've done is antagonizing. And you had, when you were elected, promised a dialogue with the Serbs. So are you backing down on that promise, or what was this, a misunderstanding?
On the contrary, we have an agreement with Serbia. On 27th of February this year, it will be 1 year that in Brussels we made this basic treaty. The problem is that Serbia is not signing it and is not respecting it. So I think that appeasement of Serbia should stop from both Brussels and Washington, D.C. I believe that they are considering Serbia as a kind of irrational actor which has to be appeased. I think we need accountability, transparency, European Union and NATO for the entire Balkans, and Kosovo has no alternative to that.
Prime Minister, how important is it that you sign something sooner rather than later? We could see Donald Trump in the White House. He has been more supportive of Serbia.
I think it's important to do this as soon as possible, but then again, we cannot force Serbia. It is European Union and US who can do that. Meanwhile, Serbia is taking armament and ammunition from both Russian Federation and China, and they want American tolerance and EU money in addition.
But the way you're talking, Prime Minister, makes it very difficult, right, for the normalization to start. Is that, how would you assess the current relationship?
We have seen last year Belgrade agreeing to the text of agreements due to pressure of EU and US. So basically, pressure functions and works, but it has to be done by Brussels and Washington, D.C. We are the most democratic country in Western Balkans, and according to Freedom House, Transparency International, World Justice Project, when it comes to anti-corruption, when it comes to political rights and civil liberties, Kosovo is #1 among 6 countries of Western Balkans which still are not part of European Union.
I understand one of the linchpin is, of course, the Association of Serb Municipalities in Kosovo. How's that going?
That is now turned into so-called self-management of Serbian community, is Article 7 of Basic Treaty that we have done last year. It has also an implementation annex from March last year, but out of 11 articles, Serbia already violated 8 of them. And mid-December last year, Madam Prime Minister Brnabić from Serbia sent a letter to EU saying that they are basically withdrawing from the agreement. Right. So for me, it's very difficult to proceed further when they don't sign the agreement, don't respect it, they do violations, and finally, they sent a letter where they say they don't obey to it anymore.
Prime Minister, tensions are high. How do you see the Balkans in terms of security in the next 10 years?
We wouldn't have these tensions if we would have de facto and de jure recognitions among all the countries. Serbia recognizes de jure Montenegro and Bosnia and Herzegovina, but not de facto. On the other hand, they do recognize us de facto, but not de jure. We need all the region into EU, into NATO, but for this reason, Belgrade has to put sanctions to Russian Federation and adhere to Western democratic values.
But Prime Minister, do you accept that maybe the dinar situation that you say the central bank has put in place is not ideal timing?
No, I think that it was long overdue. We need to legalize banking and financing. All financial institutions must have their own license from our republic, and that's what we're doing. So there will be no more sacks with cash dinar coming from Belgrade to Kosovo to destroy political pluralism and to finance terrorist organizations who killed our policemen on 24th of September last year.
Some institutions say that, the timing is not perfect, but Prime Minister, thank you so much for your time, of course, for coming on Bloomberg with us. That was Albin Kurti, the Prime Minister of Kosovo. We'll have plenty more, of course, here on the markets and on the economy. This is Bloomberg.
Much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, or mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Welcome back. This is The Pulse. European stocks actually edging higher after the S&P 500 on Friday closed to a new record high amid optimism over eventual Fed interest rate cuts, but also investors actually looking forward to a crucial update on U.S. inflation. The inflation report tomorrow, really key, a very key event for markets as traders look on clues on what the Fed does next. Coming up, we talk geopolitics with Chatham House. This is Bloomberg.
this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
This is Bloomberg.
Well, former U.S. President Donald Trump sparks concern amongst NATO members, suggesting he could abandon them if they don't meet defense spending commitments. Israel conducts strikes in the city of Rafah in southern Gaza, where over 1 million people are taking shelter as President Biden urges Prime Minister Netanyahu to shield civilians. Plus, traders look ahead to U.S. inflation data out tomorrow that will help shape the path ahead for the Fed. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So Western leaders have criticized former U.S. President Donald Trump over his remarks on NATO over the weekend. Speaking at a campaign rally, he said he once told a European leader he'd abandon NATO members to Russian invasion if they hadn't met defense spending commitments.
I said, you got to pay up. They asked me that question. One of the presidents of a big country stood up and said, well, sir, if we don't pay and we're attacked by Russia, will you protect us? I said, you didn't pay? You're delinquent? He said, yes, let's say that happened. No, I would not protect you. In fact, I would encourage them to do whatever the hell they want.
Well, for more on this, we're joined by Bronwyn Maddox, Director and Chief Executive of Chatham House. Bronwyn, as always, thank you so much for joining us. There's a lot of uncertainty about what happens in the U.S. election, a lot of uncertainty of what it means for allies. What does this mean for a leader in Europe or elsewhere who listened to that rally by Donald Trump?
It would have been a bit of a shocker. It really says, well, it says pretty much as clearly as Donald Trump did, that under him, under his presidency, the U.S. not only might not come to the defense of another NATO member, as is obliged by the NATO Charter, but he would actually personally encourage the Russian leader to do whatever he wanted with NATO members as a way of, as a punishment for them not paying into NATO. So it really destroys the principle of NATO. Now, it's been a long-standing, in my view, very well-founded American complaint that other countries have not paid their way or not contributed as much or built up their militaries. And you know that has a long history to it, goes back as long as I can remember, decades, of American presidents of all stripes making this point. And they have good cause for that. But that is quite different from saying that NATO is simply a kind of commercial transaction which the president of the US is prepared to blow up if one member or the other doesn't pay. And I'd be surprised if the conversation he purported to be relaying that actually happened in that way, in those words. They don't sound like the words that a leader of a major country would use.
Bron, so what does it mean? I know we ask a lot about whether allies can actually Trump-proof their economy. I mean, is there a way that Europe and other allies are now thinking of Trump-proofing their politics? And is that even possible without a strong U.S. presence?
It can Trump-proof their politics to some extent, and I think it's no bad thing that the US gives some hard thought, that Europe gives some hard thought to how it can look after itself, not just in defence, but in questions of migration, and how it can act as a bloc, and that includes countries like the UK that are very closely associated, even if not in the EU. It is very hard to Trump-proof NATO, because it is an alliance, and an alliance that does rely crucially, as it did from the beginning, on the US role. And if you take that out, and what's more, you remove the principle that if one member is attacked, the others will go to its defense, I'm not sure what you've got left in the way of an alliance.
But is Europe, is even NATO actually prepared for that to happen? Is there any way that in the next 6 to 7 months, there, something happens so that if Trump were to even, get out of the NATO alliance, then the world still feels safer?
The world won't then feel safer, in my view. What European countries can do and are doing is spending more on defence and giving really very hard thought to that and how they're going to do that in the future, despite all the other pressures. And they're looking across other parts of their policies to see how they can insulate themselves against a more isolationist US. But on this specific question of NATO, no, I think if he really took that view, it would destroy the alliance.
How much do you worry about security in general around the world? There are a number of conflicts that are very uncertain, that the markets are not looking into because they probably don't know how to price it. Have you ever seen a year that's as dangerous as 2024 is?
I haven't seen one that feels as dangerous as this, in the sense of the unpredictability of conflicts starting up and then not finishing. And we have obviously big in the headlights, both Ukraine and Israel-Hamas. But there is also the Sudan, which is really roiling away in a very nasty and dangerous way. And it's the potential for these to spread. And then it's the potential for these to spread to terrorism, because some of the technology we're seeing used, like drones, actually could be very easily appropriated by terrorists. So even though it feels as if we've moved from an age of talking about the war against terror to big states again jostling with each other, you can add terrorism into that mix as well. So I have very little comfort to add, except that countries' attention is now firmly on this and on what they can do to stabilize it.
Bernard, what will happen with Gaza? Can the U.S. really convince the Prime Minister of Israel to try and, temper down his response to save civilians?
Doesn't look like it at the moment. The U.S. could try harder, though, and the U.S. always has the option of not supplying arms to Israel, as it has been doing. But the President, Joe Biden's words about the response being over the top, and needing to preserve civilian life, those don't seem to have had an effect so far. And as far as we can tell from surveys of Israeli public opinion, it is still very much about getting Hamas, eradicating Hamas. So you're talking about a nation in trauma. On one side is Israel, and then the world looking at the casualties caused by Israel's response on the other. I think myself, for Israel's sake, the US could try harder to make that argument and try harder to forge a way through. But at the moment, the Prime Minister of Israel is doing what his cabinet wants and what quite a lot of his own people seem to want.
Yeah, why is the US not going down with a more forceful response to this?
That is a really good question. I think because of the deep support for Israel, because of the respect for the public opinion in Israel and the trauma that that country has suffered from the attacks of October the 7th, from not wanting to turn against Israel, as many other former supporters of Israel, including Turkey and some European countries, have done. But it is leaving Israel in a very difficult position, I think, leaving it in the trap that Hamas created for it which is that Israel's actions are turning the world's opinion against it.
Is there, I mean, we don't talk as much about Taiwan as we did 2-3 months ago. What would lead to an event where China actually thinks that it could do something significant around Taiwan without international condemnation?
It will be looking most of all at the US. And supposing Donald Trump gets the presidency and says, look, I really don't want the United States involved in foreign conflicts, which he could, which would be consistent with one lot of what he said, then China might take that as encouragement. If Russia was seen to win in any sense in Ukraine, China might also take that as encouragement. On the other hand, they don't quite know, as the world doesn't, what to expect of a Donald Trump presidency. He might also be very antagonistic towards China, and he certainly said things consistent with that as well. So they'll be looking with some caution. I think when you were asking earlier, what are the reasons for optimism? It is that the big powers, on the whole, don't want an escalation of these troubles. China, it wants Taiwan, but it doesn't want a big fight. The US, under both Biden and Trump, doesn't seem in the mood for engaging in foreign fights. The Europeans definitely want to tamp down these things. Even Iran in the Middle East doesn't really seem to want a big fight. So you have a lot of significant countries not anxious to escalate things. And that's the best I can offer you in the way of optimism.
Is there, I know there's been a lot of talk about, of course, what kind of EU leadership will look like after the European elections. Again, is this a point that we need to, focus on to make sure that certainly Europe, in this very uncertain world, can stand on its own 2 feet?
So what we're really focusing on is the European parliamentary elections, and they're in the first week of June. And they will be a very good barometer of whether, really specifically, concerns about migration are running so high that it is profoundly changing the politics of many countries. And you're seeing that, whether it's in Sweden or the Netherlands or Germany, and indeed Italy, that, and it was part of Brexit as well, people's concerns about migration really leading them to either back new parties or back parties much to the right who say that they can control this. It's obviously a factor in the US presidential campaign as well. I think that is one big question hanging there. But the other questions are old ones of how Europe is going to answer its own questions, its economic questions about not growing fast enough, and about its people's expectations of public services that their countries can't always afford. And that's an old debate. It's very much the theme of the British election coming later this year. So there's a lot to watch out for, but the common question that governments are really focused on is how to be able to say something plausible on migration.
Thank you so much for joining us. Bronwyn Maddox there, Director and Chief Executive at Chatham House, looking at some of the geopolitical hotspots for 2024. Now, also, don't miss our big interview coming up on Bloomberg TV, GOP presidential candidate Nikki Haley. She'll be live on Bloomberg Surveillance TV and radio. That's at 12:30 p.m. UK time. Coming up next, in the next 30 minutes, our exclusive conversation with the German Finance Minister, Christian Lindner. Coming up, we'll also have an exclusive conversation with Google's President of Europe, Middle East, and Africa Business and Operations. We'll be discussing the opportunities for AI in the job market. That's coming up next, and this is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He caught himself self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot. You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything.
Now, the Kansas City Chiefs became back-to-back champions. That's after they beat the San Francisco 49ers in only the second ever overtime game in the tournament's history. Let's get more on the big business of the big event. Bloomberg's Charlie Wells joins us. Now, we know who won on the field. I have a lot of questions about some of the ads, but who won on the corporate side?
Oh, well, let's get to those ads. Well, look, on the corporate side, I mean, definitely the NFL, right? It's a $20 billion business in revenue annually, so that was huge. You know, Taylor Swift, she made it. She flew in from Japan. There were so many questions. We were talking about this last week. Could she make it? Could
and the
she
couple
not?
of the year.
Exactly, couple of the year. They had what one columnist called a kind of rom-com ending there. But another big winner here was sports betting. And so the Supreme Court deregulated sports betting in the U.S. in 2018, and we've seen a huge explosion of growth there. And this was a hallmark moment for that industry. Now, about a quarter of Americans were expected to bet on the Super Bowl yesterday. So we'll see if that pans out, but huge moment for that industry.
So is there a playbook that advertisers actually used to get in the big bucks?
Yeah, I mean, the best part of the Super Bowl, according to some people, I might be one of these people, is the ads, right? I mean, they're like huge. It's, I think, $7 million for 30 seconds. So much production has gone into this. And I would say it's interesting. I mean, usually at the Super Bowl, you'll pick up on a kind of industry that's dominating the ads. You look back to 2022, that was very much crypto. Interestingly, this year, there were a lot of ads for the sort of food and drink industry. So we had Aubrey Plaza in a Mountain Dew ad. We had an Uber Eats ad.
Uber Eats is like huge, right? And they had everyone. I had to watch it twice to make sure that there was not another famous actor.
Yes, exactly. So look, there's a statistic that shows that last year, and I'm sure that this will beat the statistic, 40% of ads had multiple celebrities in them, and that is a six-fold growth from 2010. And so, yes, you're right. Lots of celebrities. Kind of hard to keep track of who's advertising what.
Las Vegas, also the big winner.
Huge winner. I mean, this was their first Super Bowl ever. I think they're very happy about it. They have spent so much money trying to attract big sports teams. They've got hockey, baseball's on the way from Oakland. I'm Californian, so this is hard. It was, also hard to see the 49ers lose, but they want to diversify. They get all that tourist money, and they want to boost it even more with sports.
I mean, so there was so much excitement. I know there's always excitement, but also the fact that Taylor Swift were there. There were a couple of celebrity spottings. I mean, is this really what makes it?
I mean, look, it's interesting, more women have been watching football lately. About half of viewers in the last Super Bowl were women. I think I'm not a woman, but I'm a huge Taylor Swift fan, so this is really exciting.
She brings inflation to places. She's an economic phenomenon.
Well, you want to talk about inflation? The tickets for this Super Bowl were on average $9,815. It's so expensive, but a lot of excitement and a lot of money spent.
There you go. If I had to write one book on economics, it'd be a Taylor Swift economics book. Maybe I'd co-write it with Charlie Wells. Thank you for joining us this morning. We'll have plenty more shortly. This is Bloomberg.
there is no digital without chips. And I emphasize that because everybody speaks about the digitalization of the world. And I would even go a step further. There is no Green Deal without chips. So yes, it's a bit like the new oil for the world. And given some of these geopolitical tensions, especially between the US and China, it's become a necessity, I believe, to be more resilient against these geopolitical tensions. And while finding it out the hard way through the past 2 years during the pandemic, and what I mean with the hard way is that we've all seen how key industries in Europe and the US, especially in the industrial, medical, and automotive sectors, have suffered from a shortage of semiconductors.
Now, experts have struggled to get an accurate picture of just how many jobs will be eliminated as artificial intelligence advances. One tracker has actually reported U.S. firms have announced 4,600 job cuts since May related to artificial intelligence, but there are fears that this could be a vast underestimate. Now, of course, one of the companies at the forefront, very forefront of AI development in Google, and the firm just announced 25 million euros of funding to support AI training and skills for people across Europe. Well, I'm very pleased to be joined for an exclusive conversation by Google's President of Business and Operations in Europe, the Middle East and Africa, Matt Britton. Matt, as always, thank you so much for joining us. When you look at some of the changes in AI and what that means for job losses, can you quantify it, and what does retraining actually look like?
Yeah, I mean, I think there's an array of analysis out there, isn't there? But the most important thing is that we make sure that nobody's left behind by AI. Actually, estimate of 1.2 trillion euros of economic growth in Europe if we land it well. Definitely the case that the work we do will change. For most people, what they do within their jobs is likely to shift. For some people, maybe the work will go away, and those are the ones we really need to make sure we retrain. But then there'll be whole new industries. You know, when I left university, the web hadn't been invented, and for the last 20 years, I've worked in the job that depended on it. We didn't have web designers and data analysts and so on then. So I think there's an overall huge opportunity. And the reason we're launching this opportunity initiative for Europe with 25 million euros is to make sure that we don't leave anybody behind.
Yeah, but Matt, I guess the difficulty is you don't really know where we'll end up, so we don't really know the skills needed for tomorrow. Do you do this with governments? How do you see, if I tell you, look, Matt Britton, what does the workforce look like in 5 and then 10 years? How do you answer that?
Yeah, well, the good news is we've had some experience here. So when I took this role 8 years ago, there was a digital skills gap in Europe, and we set out to try and train 1 million Europeans in digital skills. Now, 8 years later, we've trained 12 million, and we've worked with governments, ministries of labor, small business associations, trade unions, and others to bring digital skills to everyone. And that's why we're confident in this 25 million euro opportunity initiative, that we're going to try to reach out to those people who are perhaps most vulnerable or in underserved communities. 10 million euros straight away is going towards reaching workers who are likely to be most vulnerable. We're also boosting our Growth Academy for startups, which is most people affected by AI will be in AI using economy. Startups are likely to be the AI building economy. So we're launching an effort with health to begin with there. And then building on our digital skills stuff, we've got AI fundamentals for everyone, and we're making that available in 18 more languages today. So I think the right thing to do here is say that AI has huge opportunity to help all of us in science, health, work, education, and life. But there's a risk that some are left behind, and that's why we need to lean in together with governments and others to make sure that we're equipped for the future. You're right, we don't know exactly what those jobs are, but we do know people will be and need to be able to be confident in using the tools.
Matt, how does AI regulation in Europe actually affect, I guess, your development and rollout of AI products versus the rest of the world?
Yeah, I think what we see in Europe is incredible skills and desire for AI. When you survey people, the vast majority of Europeans believe that AI can have a benefit to them and to society. So there's a desire to see it landed. But what the surveys tell us across 17,000 Europeans and others is that they want governments and technology companies to work together to make the technology safe and accessible to everyone. Now, today's initiative is making sure that it's accessible to everyone, making sure it's safe. That's for the regulators to set out the guardrails, and the AI Act in Europe, the ink is just drying on that, and that has been a 2 or 3 year engagement with companies like ours and communities to try to come up with good rules of the road. And now the devil's in the detail of how we apply that. But we think it's such an important technology, it needs to be regulated so that we can harness it for good for everyone.
And is it really, if you look at, for example, your cloud business, is it all about AI that's driving demand, or is it a little bit more balanced?
Yeah, there's an array of things, but I think a couple of things I'd say that, you know, it's easy for people to think that AI and chatbots are the same thing. Actually, AI has been around for much longer, and it's much more than chatbots. So, you know, 7 or 8 years ago at Google, we tried to pivot to be an AI-first company, and Google Translate is perhaps where it was born. You know, the connection of languages and understanding languages led to technical breakthroughs and these things called large language models, which are now powering lots of the generative AI you see. But AI is useful for so much, and the most exciting areas, I think, for society are scientific and health breakthroughs. So if I take, you know, researches into vaccines that's been top of mind for some time, or drugs or crop resilience, that depends on understanding proteins. And a few years ago, there were about 175,000 proteins that had been painstakingly identified in 3D structure by PhD students. It would take 5 years for one PhD student to find one 3D structure of a protein. Now, AlphaFold, built by my colleagues at Google DeepMind, changed all that. And in a matter of months, they catalogued 200 million proteins. They're available for free to every expert working in this area, and now 1.7 million experts are using AlphaFold and that database of proteins to advance drug discovery, disease research, crop resilience research. So I think things like that, which maybe people don't see when they see the headlines about AI, that are changing what's going to be possible.
They see it on Bloomberg. Matt, if you were to go back to university now, given what we know about where AI takes us, what would you study? What do you tell young people to study?
Well, it's interesting, isn't it? You know, I graduated, I'm quite old, Francine, so I graduated in 1989.
You're not.
That was the year that Tim Berners-Lee came up with the idea of the web. And like for the last 20 years, my professional life has depended on that invention. So I think it's impossible for us to predict, you know, technically what people will need, but we will need skills, critical thinking, creativity,
Matt,
collaboration.
Thank you. Matt.
Ask you about politics. You've been involved advising presidential candidates, and I presume presidents as well. Do you ever have any interest in serving in a senior position in the federal government or running for office?
Absolutely, unequivocally, no.
The aggravation factor isn't worth it?
It's the aggravation factor, but it's more importantly is I don't believe there's any integrity in it.
So you do give money to politicians, though, because that's the system, but you...
It's part of the game. I think, to be honest, I think there's a need for a multi-party system in the U.S. to give more people a choice about where they can throw their voter support and their political support, but also to cause the country to sort of come together by having everybody have a role in deciding what is in the long-term best interest of the country. I've often believed that Black Americans as a people and as a voting bloc should adopt the same position that the original founders of the Congressional Black Caucus had in early 1970. Their philosophy was enunciated like this: Black Americans should have no permanent friends, no permanent enemies, just permanent interests.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
Good morning from our world headquarters in New York. I'm Manus Cranny.
And I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
After the S&P hits another milestone last week, traders now turn their attention to the inflation data due out tomorrow. That will help shape the path and the narrative ahead for the Fed.
It's Merger Monday. Diamondback and Endeavor are in talks to form a $50 billion oil and gas giant.
And a Bloomberg exclusive, Germany's finance minister weighs in on the relationship with the UK and the global impact of the US elections. A very good morning. Another record close. It was above the 5,000 level, and that's what matters. It's all about the psychology. We're full bull in these markets. Can it endure? We are going to talk more about the resetting of the rates narrative. There's the S&P 500 flinching unchanged, but there is this lovely narrative building. You know, don't fight the Fed. Well, don't fight the full bull market that you have. Again, the rates narrative is changing. 80% of the earnings are already in, and you've got a very, very firm beat. 2/3 of the earnings are in, 80% beat on that front, and it is Deals Monday. We have this Diamondback Endeavor deal potentially going through at $50 billion in size, so we're going to see how that plays out. It's a combination trade. NASDAQ in the green this morning. Again, the narrative on these U.S. equities, DBK, Deutsche, Chadra says global profit growth turns positive for the first time in 5 quarters, and Goldman Sachs, Mr. Costin over there, forecasting U.S. dividend growth for 2024. Stock 600 up 1/3%. Don't fight your inner bull. Danny, good morning.
Manus, you'll have to forgive me. I didn't make caps over the weekend. I didn't make an S&P 5000 cap. I'm sorry.
Did you make me a Super Bowl cap?
I didn't watch a Super Bowl. We got to sleep, Manus. This is a tough schedule. You understand that more than anyone. Meanwhile, these markets, they are quite sleepy. We have a lot of stuff that we're just waiting for. We have a parade of Fed speakers today. We got Bowman, Barker, Kashkari, New York Fed inflation expectations. And then tomorrow, Manus, it's that CPI data. So in the meantime, a little bit of a bid for 10 years. Not much, but they did rally 15 basis points. Yields did rather. Prices went down. Meanwhile, the yen, it is stronger today, but still hovering around a 2-month low. UETA last week saying that even when they normalize policy, they're going to keep it easy. Meanwhile, Bitcoin, it is up for its 7th straight day. That is the longest winning streak in over a year. It's kind of been sneaking up on us. We're almost at 48,000. It is lower this morning by 0.5%, but even so, $2.8 billion have flown in to those ETF funds since they went onto the market. But Manus, a lot of what we're seeing in the 10-year, I think you put it really well last week when you said just quietly, yields have been creeping higher. It is this idea that we are finally relearning the lesson that you can't fight the Fed. It seems that we need to relearn this multiple times, but look at what happened. About a month ago in December, we had 7 rate cuts priced in.
Yeah.
It goes lower, 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 until at the moment, we're close to that 3 that's on the dot plot. We're just above 4 cuts that are priced in for the year, Manus.
And the question is, where is the new neutral rate? You're right. I mean, I think that bar chart encapsulates it all. It's finally the market being brought to heel by the Federal Reserve. I look at the macro compass over the weekend, and there's a lovely note out there over the past couple of days where the proposition is this: how much growth, how much strength can you have in the U.S. economy with a higher new neutral rate?
Right, and then if that's the case, if you have a higher new neutral rate, how do you adjust everything according to that?
Well, we can dig into the alpha, into the macro compass a little bit later on. Don't worry, it's got something in there on the Russell 2000. You'll be happy.
Small caps.
It's small caps. It can endure for the small caps. Let's get to our guest this morning. It is Stephen Gallo, a global FX strategist at Bank of Montreal. Stephen, good morning. Good to have you back on the show. Here we are. We're full-blown risk-on mode in these markets. Spreads are behaved. Equities are flying. And the dollar is up for 6 weeks in a row. In this kind of row and rates readjustment narrative, does dollar strength endure? Good morning, Mr. Gallo.
Good morning. Thank you for having me on the show. I think that the dollar story is probably overall less negative than what we were thinking at the start of the year. That's partly to do with the U.S. growth trajectory, and it's partly to do with the fact that the markets are now coming to the realization that the Federal Reserve has the luxury of being able to wait to lower the policy rate. We're looking at the May to July period for the first interest rate, 25 basis points from the Fed to come. In my personal opinion, May and June seems perfectly reasonable, but it could be between May and July. And I would say still, based on what's currently priced in for the Fed in terms of cuts for the full year, it's a little bit rich, just a little bit rich. Having said that, I think what we are starting to see in terms of the performance of the U.S. economy is more evidence of disinflationary growth. So Jerome Powell and the Fed and the U.S. economy right now, based on the real data and some of the survey-based data, are in a pretty good spot. It's the other economies that I think are in a little bit of a more worrying spot.
Well, Stephen,
so I don't
to that
think
point, you write that central banks with stagnating real economies, the danger is that they're unable to ease policy because they have to defend their currency while the Fed is starting to ease. Can I be clear? Are you just talking about the UK there?
No, not at all. I think I think that because the dollar is the benchmark currency, it's the numeraire for the global monetary system, and a bad situation for the global economy, which is not it's a non-zero probability. It's not our base case, but a bad situation for the global economy would be that the Fed is unable to ease early, certainly not as early as perhaps the market's priced in, but it's not able to ease early whilst other central banks are forced with this difficult decision. We've got a stagnating economy, but we've got above target inflation, and we think we need to head off a deepening downturn. Do we ease and deal with the currency impact at the same time? Or do we ride it out with the policy rate where it is? So that is a difficult situation. It's not something I would say is off the table, but it's not the base case at the current stance. But what I would say is, for example, if you look at, in particular, the euro area seems to have a bad form of disinflation because of the tightening of credit conditions, because of the rise in bank funding costs, refinancing that took place in 2023. Some of that carries over, I think, into this year. it has a bad form of disinflation or semi-bad form of disinflation. So if anything, I would say the risks are skewed to, and I don't think this is, this is not shocking, it shouldn't be shocking to anyone, but I think the risks are skewed to the European central banks, including the BOE, easing before the Fed.
So, Stephen, if the Eurozone has, as you call it, perhaps a more malevolent form of disinflation, let's square off at home in the UK. I mean, the market there has repriced. If you think the Fed repricing has shaved about 50, the market has shaved about 50 basis points off the Fed, but it has shaved 75 basis points off the cuts that they can expect from the Bank of England. So in other words, we're looking at 75 basis points for the rest of the year from the BOE versus 150 from the US. So what does that say about the Bank of England's capacity to cut rates? What's the market's assumption there? And what does that put a floor on sterling if we translate it into FX?
Not necessarily a floor on sterling. Okay. I would say that in terms of cable, I think you still want to be, the 127 to 128 range in cable. I still think you want to be selling sterling there. You want to be buying dollars in that range because the structural outlook for the UK isn't particularly good. There are potential fiscal risks associated with the general election, but there's still a little bit of uncertainty related to that so far. But I think broadly speaking, the situation you described, Manus, is where the market is grappling with this issue of R**. Where is the new neutral nominal rate of interest? If real interest rates, if the real neutral rate of interest hasn't changed a whole lot, you could argue maybe it has, maybe it hasn't, but if it hasn't changed a whole lot, which is my base case, but where is the neutral nominal rate of interest? Right. And I think that the market is grappling with where that is for the UK, for the US, for the euro area, and probably it's going to be a bit higher than.
This was the new equilibrium that you were talking about, and how do we adjust to that world? Stephen, the other world we have to adjust to is politics. JP Morgan was out with a note on Friday saying that Donald Trump's solid primary performance is a dollar bullish risk factor. Do you think they're right?
Well, his solid primary performance does not spell what is going to be the outcome of this election and what's going to take place between now and Election Day. So I would lean off a little bit against that. That being said, my views are that a Donald Trump victory, however narrow, is probably at least partially priced into the US dollar. I think what's not priced is a Trump-led GOP landslide. That, to me, is a very dollar bullish scenario. But I think a constrained Trump victory where the government is split, we're sort of there already. So I mean, feeding into my broad dollar view for the year, still looking at episodes of dollar weakness interspersed or with intermittent periods of dollar strength, and kind of a flattish profile for the year as a whole, unless from the political spectrum, the polls flip dramatically either way, like landslide versus, it's going to go to the Democratic side. But that's kind of where I am. I think the Trump victory, constrained, split government, is almost priced in. It's almost reflected.
I want to talk about your outlier risk because you've whetted our appetite. It's Monday morning, Stephen. It's 5:11 a.m. in New York. You've had a lovely morning, a cup of tea, a bit of toast. You've had a very relaxed tune in for this. So why not go for we'll go for the outlier risk. Come on, Gallo. So if it's a full-blown Trumponian risk, what does that do to risk in the world? I mean, there are some policies there that we know may be contentious in trade, in NATO, etc., to say the least. But extrapolate for us if it really was a full sweep by the Trump.
GOP landslide with Trump as the candidate, and
yeah.
Initially big dollar rally, but there's an argument to be made that into 2025, once this administration and this new government is seated, so to speak, there's a risk to be made that geopolitical risk actually subsides a bit. But it's very uncertain at this point. I would say that the more certain it looks as that Trump will not only be the nominee and he wins the presidency, there's a little bit of dollar strength left in that trade, but I think not as much as there was on December 31st.
Okay.
If it looks like there's going to be a GOP landslide, there's more dollar strength, and then we wait to see. But my base case now is that most of the materialization of geopolitical risk is going to be confined to 2025, because I think that in the run-up to the election, as long as the Trump risk factor is there, you may actually see some type of reduction in global geopolitical risk because of the uncertainty.
The good news, Stephen, and maybe
that
bad
doesn't
news.
mean that there won't be
Sounds like
that doesn't mean that there won't.
Another year of kicking the risk can down the road, maybe is what that sounds like.
That doesn't mean that there won't be. Does not mean that there won't be volatility spikes. There probably will be.
Right, but the big geopol risk is 2025. Stephen, unfortunately, we're going to have to leave it there. So great to get your thoughts this morning. Stephen Gallo of BMO. Okay, Manis, let's dig into some of the top stories that are trending on the terminal this morning. Ukraine says Russian forces are increasingly using Starlink terminals on the front line. Kyiv says intercepted conversations between Russian troops in the occupied Donetsk region indicate they had Starlink devices installed for internet access. Elon Musk Starlink says it's not active in Russia and doesn't ship to it.
The founding family of Tod's is teaming up with the buyout firm Al Caterton in a new attempt to take the company private. Al Caterton, which is backed by LVMH, will offer to purchase the shares from some investors for 43 euros apiece. Now, the price represents an 18% premium to Friday's closing price.
And the Kansas City Chiefs are back-to-back Super Bowl champions after beating the San Francisco 49ers by 25-22 in only the second overtime game in the tournament's history. Manis, we got to talk about Taylor Swift, of course, was in the stadium cheering on the winning teams and her boyfriend, Travis Kelce. I feel so bad for Usher because no one cared about him. He was not the celebrity that anyone cared about.
That's a bit harsh.
No, but seriously, I opened up the news because let's be honest, I didn't watch any of it, but I opened up to see what happened, whatever. Yep. I saw the score, I saw yay for the Chiefs, I saw yay for Taylor Swift, literally nothing about Usher.
I saw her plane arrive as I was reading in for our FX segment. I thought, this is news. This is her plane landing. They were tracking it. They were tracking it to the game. And then, of course, in the midst of all of this, it should be said that this is the Chiefs' second straight Super Bowl title. And this is their third title in 5 years. So for the football, strangely enough, that's what everybody turned up for. It was quite a triumph.
Not everybody, Manis.
Not everybody?
Not everybody.
The Swifties turned up and paid $10,000 a ticket just to be in the same stadium.
I mean, they'll pay that much to go see her concert. Why not see her smooch her boyfriend for that much?
Ooh. That was it. That was the front page on Instagram this morning. It was the smooch. Should we talk a little bit about the data that went with this?
Yes.
The advertisers, $600 million in-game revenue. This is just where you realize the power of this event.
Well, here's the data I have for you. 68 Americans were expected to have bet, which would be a record $23.1 billion. Here's the kicker, though. Less than half of those were legal bets.
That's disgraceful. I've never heard of an illegal bet in my life that was off campus or off base. Okay, well, it was, by all accounts, it was good. Everybody I know went to a Super Bowl party. You didn't invite me.
I was asleep. I literally didn't watch a single second.
I don't think she went to bed at 6 o'clock last night to be up for 2. Okay, we got to cut and run because we've got an exclusive interview for you. It's with the German finance minister. It is Christian Lindner settling into our London headquarters studio with Francine. That's next on Bloomberg.
this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
What happened was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you know, you got to be smart about this.
It's Bloomberg Brief with Danny Berger and Manus Cranny in New York. German Finance Minister Christian Lindner is in London for high-level meetings, and I'm pleased to say we have an exclusive interview with him. Bloomberg's Francine Lacqua is sitting down with the minister now. Francine.
Danny, thank you so much. It is always a great pleasure to speak to the German Finance Minister, Christian Lindner. Thank you for joining us. I mean, you're here getting down to, it's always a pleasure. You're here down to business, also speaking with the Chancellor a little bit later. But can you update us on some of your biggest worries? What should we do with commercial real estate that started in the U.S. and actually infecting quite a lot of places in Europe and Germany?
Well, we are witnessing an adjustment period. The interest rates are much higher than expected, and so many companies are worried and have to correct expectations. I think we have to be aware of the situation. From my perspective, for example, the ECB as European supervisor in the banking sector is aware of the situation and decides what is necessary to decide.
But, Minister, do you worry about the possible stability? I know there are a number of smaller lenders in Germany that have been through troubled waters. Again, is that commercial real estate? Is that lending practices? Like, how are German banks doing?
Well, the German banks which are involved in this business are under the supervision of the ECB. So I'm not involved in this, but from all what I have known, the market as a whole is stable, unless there is a need for new priorities and to rearrange projects due to the higher interest rates.
I know you get many questions on the German economy, and you know, in Davos you were with a bit of humor saying that look, Germany is tired, but not a sick man of Europe.
Of course, yeah.
There's a lot of questions though about the German industrialists that in the past had their glory and that now are coming down. How did that happen?
Well, Germany has some structural deficits, and these deficits had been covered by low interest rates, by demand from the global markets, and, well, the very cheap fossil energy which we imported from Russia. And now this situation has changed, and the German economy has to find a new basis. I think there is potential for a fast turnaround, given the human capital, the intellectual property, the substance of our economy. But since the circumstances have changed, we have to improve the framework conditions for our businesses, which means reforms for the labor market, which means less red tape, We need investments in the public infrastructure and the digitalization of our public administration. And of course, I think we need a reform of our corporate tax system.
But so, Minister, do you accept that I guess the industrial age of Germany's superpower is gone and you have to reinvent yourself?
No, look at the figures. We are still quite strong. But, well, we are in the process of transformation. Digital technologies are becoming more important. We have the challenge of decarbonization of our industrial bases. But we are doing quite well. I'm very optimistic. We are investing a lot in the green transition. And if we manage to improve the framework conditions this year, I expect an economic upturn very soon. But we have to improve the framework conditions. We have to decide for structural reforms.
Minister, we're here with a beautiful background of St. Paul's. Yeah. Is there anything that Germany has learned from the UK's departure from the EU?
For us, the single market is of utmost importance, and this is why I'm strongly committed to the European Union, and so should Germany. As you are probably aware of, we have some parties in Germany, especially one, which is questioning the membership of the European Union, and a Dexit is the worst we could do, and this is why we should improve the European Union. I think it has a too strong focus on regulation and bureaucracy, but as a single market, it is indispensable for Germany and of utmost importance for our economic development.
Minister, what you're alluding to is, of course, the far-right AfD that says basically that Germany should follow suit, and you call it Deutschland exit, so Dexit. What does that look like? Actually, what would it do to the economy if it were to happen?
It would ruin our economy, and this is why we have to tell people, okay, you maybe are not in line with government policies, but this is no reason for changing the complete system and for changing what our wealth is based on. And this is an open-minded society integrated in European partnership.
Minister, there was a lot of hope, I think, from Germany and others, that the Brexit meant that business, and certainly people from the City of London, deals could move elsewhere, maybe to Germany and especially Frankfurt. Are you disappointed that has not happened with the force that we thought it would, and why?
Oh, we have seen businesses move to Frankfurt. I think about 50 business entities have moved to Germany. And I think there is much more potential. But as I have said, the competitiveness of Germany is not as good as it could be. And this includes the financial sector. Actually, I'm preparing some new proposals how to improve the attractivity, the competitiveness of Frankfurt and Germany as a place for business, especially in the financial sector. We have already made one step. With our Future Finance Act, we have improved, for example, the ecosystem for startups. We have made it easier to be listed in Germany, and the tax surrounding for funds is now much more attractive than it had been before. So we are making progress.
I mean, so how fast can we actually see a turning? So when do you expect this to be, I guess, fully integrated to make a real difference for the city of Frankfurt?
Well, we are preparing it in the next couple of months. We have a high-ranking expert group, including banks from abroad, or representatives from banks from abroad. And I think we will have a package in the second half of this year.
Minister, the other thing that's extremely interesting is that Germany reduced its stake in Deutsche Post. Is there anything else that you want to cut or offload?
Well, Germany is following a long-term strategy. We want to reduce our share in all those companies in which there is not a federal interest to be a participant, a shareholder. And this is why we are going forward step by step. But there is no need to be fast.
Do you have a priority list? I know there's, Commerzbank, Deutsche Telekom, Uniper. There's also, how do you decide what to offload next and what kind of time frame?
Yeah, so it is a long-term strategy, and we are following it step by step. And as you know, it would not be wise to make a public announcement at the moment. There is no need for it. And these are strong companies which are successful. And the only strategy is to reduce it because there is no federal interest. And so in a social market economy, if we don't need to be shareholder, then it's better to give the shares into markets.
Minister, you'll have to come back to talk about that. But final question on, of course, the constitutional borrowing limit that you're for. Many economists are against.
The debt break.
Yeah, the debt. Why do you think they're wrong and you're right?
Well, we are paying higher interest rates. In 2021, we served public debt with 4 billion euros a year. Now it's 36. And so we have to make decisions for priorities. We are investing on an all-time high. We are reducing the tax burden for private households and for corporates. We are investing much more, spending much more for education within the limits of our debt break because we are paying high interest rates. And so it would not be sustainable to make higher borrowings. And the constitutional break is in the Grundgesetz, so we have no choice.
Minister, it's very nice to see you in London. What are you most looking forward to in London?
Seeing my colleague, Jeremy Hunt, and visiting a pub with him this evening.
There you go. Okay, thank you so much. That was the German Finance Minister, Christian Lindner, with an overview, of course, of some of the challenges and opportunities for Germany and beyond. With that, Manus, I'm going to send it back to you in New York.
Francine, thank you. Great conversation there in London, Francine Lacroix, with the German Finance Minister. This is Bloomberg Brief. It's Monday morning. It's just gone 5:30. Let's get you up to speed.
Yep, here's what you need to know. Manus.
After the S&P 500 hit another milestone last week, traders now turn their attention to the inflation data out tomorrow. That will help shape the path ahead for the Fed.
And it's Merger Monday. Diamondback and Endeavor are in talks to form a $50 billion oil and gas giant.
The former president, Donald Trump's latest remarks sparked concern among NATO members, drawing angry rebuke from the White House.
Manus, it's Monday morning. Volumes are light. It's New Year, Lunar New Year in China, National Day in Japan.
Did you celebrate Lunar New Year?
I had some very spicy Szechuan food, so yes, I definitely celebrated it. I'm going to add another reason why volumes are light.
Go on.
It's the Super Bowl flu. Everyone's hungover, not at the trade.
Well, everybody was at a Super Bowl party, except for us.
Except for us. And to that, let me take you to these sleepy markets. If you are now just waking up with a hangover after your Super Bowl party, yields little change this morning, a slight bid after that sell-off last week where we saw 15 basis points worth of gains in your 10-year yields. We've seen that slow creeping higher of removing the bet of cuts. We're now around 4 cuts priced in. It was 7 to start the year. Meanwhile, dollar versus the yen, seeing some weakness coming through the dollar, some yen strength, but we're still around a 2-month low after last week. Ueda just throwing any cold water on the idea of aggressive rate hikes. If that cycle coming in, he says no. If we normalize, it's still going to be easy after that. Finally, we have Bitcoin. It is lower by about 0.2% this morning, but it has been on a winning streak. 7 straight days of gains. That's the longest winning streak in a year. $2.8 billion worth of inflows have gone into the ETF, so don't count Bitcoin out yet, Manus. It's at $48,000.
Well, we are still above the 5,000 level on the S&P 500. We closed there above that critically important psychological level. Do big numbers matter? I'm not sure that they do. It's whether the earnings, and we are 2/3 of the way through the earnings score sheet. 80% of a beat. That is the best since the middle of 2022. So we're firmly above the 5,000 level. It's Deals Monday. You've got Diamondback and Endeavor. So that, again, another pretty hefty oil energy deal going through. That's where the biggest M&A, some of the biggest M&A, along with pharma deals coming through. NASDAQ up 0.7%. There is a narrative coming through from Goldman Sachs and from Deutsche Bank about dividends. Chandra says global profit growth turns positive for the first time in 5 quarters. And the consequence at Goldman Sachs on that is that you're going to have this growth in dividends, Danny. But I think if we go back to the first conversation that we had about risk today with Stephen Gallo, pretty interesting, as he talks about the dollar being fully priced at the moment, but we're still not discounting other narratives, are we?
So it's fully priced, he says, for the idea of a Trump victory, more or less fully priced, he says. But the interesting thing, Manus, is what you were alluding to, this idea that we are not fully priced for a landslide GOP and Trump combo, that's just not in there yet. And he says initially it would be dollar positive, that.
Yeah, dollar positive, and he talks about the geopolitical risks in the world. It's interesting, you sort of said, oh, is that going to kick the geopolitical risks into 2025? And he said, not necessarily you'll get vol spikes, but you're going to get this pump up in dollar. And he said, on a GOP landslide, you may well see a dissipation of geopolitical risk. But it's a very interesting conversation because, you know, Stephen gives it some considerable thought.
Right. Well, we know Europe is nervous after Trump's NATO comments over the weekend. I know we're getting to that later in the show, but it is a real risk. Meanwhile, stocks don't care.
No.
Stocks don't care at all about that risk.
They just care about the Super Bowl final.
It's so true. Is that why they went to another fresh record? They were anticipating Taylor. It was a record. 5K, there we are. I didn't make Manus a hat. He's mad at me, but we're just going to forget that. We do have some key inflation figures. Joining us now is Jay Woods, who's also not wearing his S&P 5K hat. It's, of course, the Chief Global Strategist at Freedom Capital Markets. Do you even have a 5K hat?
I'm getting one today. I'll bring it next time I see you guys.
That's what we need. It needs to be within the gift policy, so it can't be a nice hat, just to be clear.
Oh, no, it's pretty bad.
Okay, perfect. Yeah. Okay, so we're at 5K. But you say you're concerned that this rally might be running out of steam.
Yeah, I mean, let's see how far we've come from. It's getting a little overextended. We're excited it's at 5K. Who's not happy about that? But, you know, given the run we've been on, I'm seeing some divergences, and people talk about the breadth isn't there. But in the S&P 500, we're 10% above the 200-day moving average. When that historically happens, doesn't mean we're going to crash or something bad's going to happen, but we're going to pause. It happened in December. It also happened back in July, and we pulled back. So now that we're a little overextended, it would take a lot to go much higher from here. We're watching the CPI this week. That could be the next catalyst. But the CPI is one thing that has moved the markets. And if we pull back, that's not
a bad thing.
You know, we pull back maybe to 5,000 the way we're going.
Don't forget, I mean, we put on, what, 20% since those lows just before Christmas. You do play, I mean, I think you knew that you were coming in today with her, so you played the violin for her. You talked about small caps. You still said that they're 20% off their all-time high. And again, there's lots of notes coming into our inbox talking about a new higher nominal rate and what that would mean for small caps. And some people are saying, get used to a new paradigm, a new higher nominal rate. What would that do to the Russell? What would that do to the small cap? What would that do to value?
Look what it's done already. I mean, it is 23% off its high, as you mentioned, just 20% off of it. It did not pull back like it has in the past. So I brought a chart of the Russell, the IWM, which mimics it, the ETF there. And it was in a nice neutral chop zone, as I like to call it, for about 18 months. And 4 times it got to the top, and 4 times it failed at the 50-day moving average. I have circles there. This time it got to the rising 50-day moving average.
Blew through.
And it held. No, it held, Manus. And now it's back above 2,000 in the Russell. The ETF is just under at 199. But watch the 205 level in the IWM. I think we're going to take a shot at that. That's the 52-week high. And you're going to see a rotation in this market. And rotation is the lifeblood of a bull market. This is what we want to see. So maybe these large caps that have kind of lifted us on our shoulders again this year, pull back a little bit. We'll see what NVIDIA does next week.
There have been so many head fakes there when it comes to small caps, though. At the end of last year, Manus, how many people did we have come on promising me that my small caps would break out?
You became a bit obsessed.
I did.
I'm just engrossed in big tech and Mike Savage.
No, but because we've had so many people say small caps are going to break out, is it just a technical thing, or are we waiting for some data to tell us that we're all clear in that?
Well, I think a rate cut will help. That'll be a nice tailwind for it to happen. But when you look at the technicals, something is a little different this time. And that, to me, sets us up from a risk-reward point of view. I'd rather take a little more risk this time, knowing that if it fails the 50-day, all right, get out, let's try it again, because the upside, the tailwind is there. So I think the small cap play may be interesting. Now you got to look under the hood. What small caps are going to lead? Staples have been struggling. You know, the regional banks have been holding us back as well.
Yeah.
But the staples are at an interesting inflection point too. If we can break out on the weekly chart, then that could be the rotation we see.
We've written a great story about, you know, how did we get from, you know, the time it took us to get from 3,000 to 4,000, sorry, 2,000 to 3,000 was over 1,200 days. 4,000 to 5,000 took us 719 sessions. So again, the sort of
percentage points, though. It's,
yeah, okay, but I mean, it's still about the time frame that it takes you to make these moves. But looking at what was behind those moves was technology and energy. We've got another deal this morning, Endeavor Diamond. You look at some of the big deals that have gone through, Exxon, Pioneer. I'm thinking Chevron and Hess. When you look at energy, and a lot of that is about buybacks and dividends, which is the belly. That's the fundamental part of it. How do you look at energy in the near term?
Well, in the near term, I think this is good for the sector, seeing these deals go down. I'm always watching Occidental Petroleum to see what Warren Buffett's going to do next. If he's going to finally just say, all right, I'm going to bring it into the Berkshire family. Energy had its run, in my opinion.
Okay.
It was the leading sector 2 years in a row. It's pausing. You watch the price of crude. Seeing these deals tells me that maybe they need to merge because they think the run is over. So I don't look at this as an optimistic thing for the sector overall. It's probably not the best place to be. Technology, it still will be the strongest suit. But I like what I'm seeing under the surface, and some of the financials continue to be strong. Staples are making a move. It looks like they've bottomed, and the industrials as well.
Well, in that tech space, I know you like NVIDIA, 46% year-to-date gain.
Yep.
Meta's at 32. Tesla, out of the Mag 7, is down 22%. Jay, is Tesla still magnificent?
The car's great.
Stock, though.
The stock, it would not be something I would, you know, put in my long-term holdings at this point anytime. They missed on deliveries again and again. The numbers have been underwhelming, but it's Elon Musk. How do you bet against Elon Musk? But, you know, technically, fundamentally, it's turned, and they need to show me something else before I would jump back in. I think there are better places to be.
Can I just tell you that the whole thesis upon the ESG, whatever it is, it's a vehicle that I have some retirement funds in. The whole thesis was 60% of this ESG fund was Tesla because of its ESG credentials.
So
and now you're just wiping it out.
I love that you were accidentally very long Tesla with that. You thought you were getting ESG, you were just getting Tesla.
Through I don't know what it is, like a mutual fund or whatever else. And one day I actually happened to look at what was in it.
Always look under the hood, what the biggest
No,
stocks
you
are
don't
in
want
the
to do that, buddy.
Is that a car pun? Look under the hood. Is that a Tesla pun?
I guess it was. Wasn't meant to be, but
you're on form this morning.
I'm
You know
trying.
what's amazing?
That's what happens when you don't sleep. So
I was going to say, no Super Bowl flu
no,
for Jay.
I went to the party and I just came right here. It was perfect.
Who were you rooting for?
I was rooting for specific numbers. There was no specific team I was rooting for.
Were you betting? You might have had a flutter.
Friendly wager. It was fun, you know. That's what makes it exciting. I lost the coin flip. I was bitter right away. So, did you stay up for the coin flip?
No,
at least?
Jay, I stayed up for nothing.
All
Like
right.
nothing. I watched
She
the
wrote
Puppy
down a
Bowl.
lot of
That was
stats.
it. I watched the Puppy Bowl. That was my contribution.
Well, who won the Puppy Bowl?
Adorable dogs. I think
Oh, okay.
Team Fluff.
Okay, we've gone completely off. Now we're completely off piece. Now we're on puppy dog watch. We're on. I'm lost. Okay, Jay, thank you very much.
Thanks for saving us, man.
Yeah, no, that's Jay Woods. We've brought you back from the brink at 5:40 a.m. on Bloomberg Brief. Coming up on the show, this is what we've got for you. Trump's NATO remarks sends shockwaves across the political world. We discuss the impact on Bloomberg.
regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it, Peacock?
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It is Bloomberg Brief. I'm Menace Cranny with Danny Berger in New York. So Diamondback and Endeavor are in the final discussions to create an oil and gas giant worth $50 billion. Joining us now is James Herron. James, another block in the M&A war. What is driving the wave of consolidation in this industry at the moment?
Yeah, we've seen a lot of deals in this space recently, and I think it's a reflection of the fact that we're more than 10 years into the shale boom, and the industry is maturing. Companies are shifting from focusing on growth to things like investor returns, operating at scale, operating efficiently, and the way to do it is to bulk up, increase the size of these companies, and increase their ability to compete in a really consolidated sector.
If then we have more competition, we were just speaking with Jay Woods, who said that this is companies acknowledging perhaps we've reached the peak of the cycle. Does this alter the makeup of the oil market?
It's certainly having an impact. I mean, the fact that we've seen OPEC been cutting now for several months is a reflection of the strong growth in U.S. oil supply. This has been something we've seen in the past. At the initial stages of the oil boom, OPEC was forced to cut its production to support prices because of the flood coming from the U.S. We're seeing that again now. Output from the Permian Basin is projected to hit another record this year. So it's having a big influence. And if the shale sector goes from being dominated by the sort of smaller wildcat explorers to these giants like Exxon and Chevron, then I think that trend looks more sustainable, because these are companies that can afford to invest a lot of money and, just keep things ticking over through the good times and the bad times in terms of oil prices.
Fair enough. James, thank you very much. That is Bloomberg's James Herron. Another big deal for the oil patch. Right, from the energy giants to political giants, former President Trump made comments surrounding NATO that many say could have dangerous repercussions.
I said, you got to pay up. They asked me that question. One of the presidents of a big country stood up and said, well, sir, if we don't pay and we're attacked by Russia, will you protect us? I said, you didn't pay? You're delinquent? He said, yes, let's say that happened. No, I would not protect you. In fact, I would encourage them to do whatever the hell they want.
Joining us now is Bloomberg's Rosalind Matheson. So, Ros, we have these comments from Trump, and perhaps they're unsurprising. And one could argue that Europe and NATO members have had some time to prepare for a second Trump presidency. But if what he says is true, that he wouldn't support NATO members that don't pay up, can Europe stand on its own?
Well, as you say, it was a theme very much of Donald Trump's first time in office, where he constantly threatened to withdraw the US from NATO. He pressured other nations to increase their contributions of their defense budget. However, the world is very different now than it was when he was first president. He'd be coming in at a time where Russia is very much still embroiled in its war in Ukraine. We also have this conflict in the Middle East, in the Gaza Strip between Israel and Hamas. You've got emerging threats in Asia still with China, so a lot to think about in terms of the shape of the world. When it comes to Europe specifically, can Europe stand on its own if NATO falls apart? If the US were to pull out of NATO, perhaps something that Donald Trump, has threatened in the past, you're talking about the withdrawal of many, many US troops from Europe, bases that they operate, a lot of very high-level equipment, including missile defense. That may all go, or he may not come to the defense of another country in Europe if it's attacked. Europe's talked for many, many years about being self-reliant on defense, but they're a long way from being there in terms of their self-sufficiency on weapons supply, on the number of troops, and certainly being able to look after themselves. So the departure from NATO by the US would, in essence, be catastrophic.
Well, certainly Stoltenberg coming out and trying to sort of say that they are ready and able to defend allies. But of course, there's the messaging to Putin. But this is Trump in full election mode. Why anybody is surprised by any of this sort of rhetoric on stage, it sort of blows your mind since you've been round this loop a couple of times before. Let's talk about another issue, which I'm sure Trump will hold forth on. This is in regards to Israel. We understand Benjamin Netanyahu is pressing ahead. Indeed, the headline this morning, Israel has launched more strikes on Rafah and freeing 2 hostages. The President of the United States is now mounting his criticism of this Israeli offensive as being over the top. So this most recent escalation by Israel, what is the take of this move on Rafah?
Well, certainly what we've seen is fresh airstrikes on Rafah overnight, and we've seen fatalities as a result of that. And despite the US pressure, we're seeing a lot of it come from the US. As you said, Joe Biden has called the war in Gaza at this point over the top. Israel is saying that they're ready to press ahead with a ground offensive into Rafah. That's that bunched up area very close to the Egyptian border. You've got at least 1 million people, according to some estimates, in that area. The question is, if you're going to have a full ground offensive there, where do those people go that's safe? They can't go into Egypt because Egypt won't take them. Can they go north back into those war areas in the north of Gaza? It's very difficult. It's a narrow strip of land to funnel them north. And so there's a lot of concern about the repercussions if there is that full offensive. However, Israel says this is something they feel they need to do. Their end goal is to eradicate Hamas. And to do that, they have to permeate all areas of Gaza. It's not something that's likely to happen in the next day or so, but certainly the intention seems to be there from Israel at this point.
And Roz, only about a minute here, but late yesterday we learned that the U.S. Secretary of Defense Lloyd Austin is in critical care. He's gone back to Walter Reed. He's transferred his functions and duties to the Deputy Defense Secretary Kathleen Hicks. How does this impact the U.S. and their approach towards what's happening in the Middle East?
Well, as you were saying, he's back in care. He has given responsibility to his deputy in the meantime, and the Pentagon does operate as a well-oiled machine regardless. But he was due to come to Europe, for example, for some big meetings with NATO this week as part of efforts to support Ukraine and no doubt to discuss what's happening in the Middle East. Without him there, what do those conversations look like? The US has got some very delicate issues at hand in the Middle East to try and defend and protect shipping in the Red Sea without getting pulled in to a broader conflict. So having the Pentagon chief out of operation, and it's unclear for how long for, is obviously a tricky one for the US.
Okay, Roz, thank you very much. Roz Matheson on the main geopolitical stories over the past 48 hours. Coming up, we'll take a look at the market-moving events. There's Fed speaker, plenty for you, pushing back from the Fed right here on Bloomberg.
maybe I should go do something else. I can't do anything better than I'm already doing. I've already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited, finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
This is Bloomberg Brief. I'm Danny Berger alongside Manus Cranny in New York. Let's get you set up for your trading week on this Monday. Today we're going to hear from the BOE Governor Andrew Bailey. That's at 1 p.m. Eastern time. Plus we're also going to get Barkin and Kashkari from the Fed. Then on Tuesday, CPI it's out. Then we're going to get retail sales and jobless claims on Thursday. PPI and UMich consumer sentiment hits on Friday. Then finally in Europe, we're going to get UK CPI, Eurozone GDP on Wednesday. But yeah, man, this is really all about that CPI. Does it confirm that backing away of the most expansive rate cuts that the market had had?
Yep, but there is the market finally coming to heel, as it were, going from 7 rate cuts just before Christmas to around 4 to 5. Don't fight the Fed, don't fight the bull market. A couple of names in focus. Block Inc., you've got that. You've got Larry Summers resigning as a member of the board there. NVIDIA, keep an eye on that, says that the technological advances are going to keep AI costs in check. And again, this is the balancing act between who you're making redundant, who you're letting go, and who you're actually hiring to build out the business. The stock is up 0.1%, and Amazon up 0.1%. We understand this is the moment where Jeff Bezos has sold $2 billion worth of Amazon shares. It was the first sale since 2021. Oh, to have that many stock to sell.
On the NVIDIA point, that's really keeping in with what we've heard from executives. Mike Wilson over at Morgan Stanley has a really interesting note he just put out that transcripts mentioning, Manus, operational efficiency are the highest ever this earnings season. And they're all talking about how they're investing in AI, and that's going to keep their costs in check.
And this is the story that we wrote just a couple of weeks ago. Big tech has let 32,000 jobs go since the start of the year, but it's not all been, it's not a zero-sum game, because who they're letting go, 32,000 across the board, they're still hiring, but they're hiring in AI, and there's some names specifically doing that.
SAP, a great example, said we're letting people go, but that's because we're restructuring and focusing in on AI. I just hope that doesn't happen to us anytime soon.
No, we're here. We've just spent a lot of money bringing her here. Why would we replace her with a hologram?
Never. A hologram could never replace you, Manus.
Yeah.
I don't think I can reach.
There you go. Surveillance is up next. That's up.
look at the number of women that want to learn the game, young girls that are joining on the tee, really an exciting time for all of us to really capitalize on this moment. When you look at women who are making most of the purchasing decisions in households, whether that's cars or that is home or financial services, and who are going to drive the wealth of the future, it's women.
Obviously, we have our car business and we need to have games here and all that sort of thing, but what else can we do? How do we grow the platform? The whole ticket pricing process. It used to be very yellow sheet of paper, maybe some numbers around it. There was not a lot of science behind it. We're now in the world and have been for many years, as most other similar businesses are, into dynamic pricing. So our pricing for a seat may change hourly if we see demand for that, all driven to maximize revenues.
The balance sheet is so important to the success of the team. And a big part of my role is to make sure that the balance sheet stays strong and that we are prudent stewards of capital. There are things that we can do that are irrespective of winning or losing. Take a look at the first budget that comes from one of the teams and ask questions about, do you really need to spend that much? Are you really shooting high enough when it comes to partnership revenue?
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
The Fed has all the evidence they would need to either cut or stay put.
We think the Fed could probably cut rates 4 or 5 times this year.
We are talking about rate cuts. It's a question of when.
As you see from the policy speak, there is no hurry for cuts anytime soon.
People talking about the resiliency of the U.S. economy. We think that will continue and push out when the possible Fed easing cycle starts.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your week started. Live from New York City this morning. Good morning. For our audience worldwide, this is Bloomberg Surveillance alongside Lisa Abramowitz together with Anne-Marie Hordern. I'm Jonathan Ferro. Your equity market on the S&P 500 totally unchanged on a 4-day winning streak on the S&P 500. 5 weeks of gains. Bramo rising 14 out of the last 15 weeks. The longest streak, I think, going back to 1972.
And crossing that 5,000 mark, that threshold that we were flirting with, this record high, this question of what's behind it, it still is the Magnificent Seven or the Magnificent Five or the Magnificent Four. It still is disproportionately weighted to big tech. We're not seeing the full broadening out yet. So have we gotten conviction yet? Or is this just simply there's nowhere else to go other than up?
If you want more earnings, NVIDIA just around the corner, about a week away. CPI, the next stop for this market. So looking ahead to CPI this week, the president had the opportunity to do a pre-Super Bowl interview. He declined. Some people who were attached to the campaign for the president suggested that there weren't enough eyes, potentially, on that particular conversation. So instead, they put out a video, Anne-Marie, on shrinkflation and the nation for President Biden.
President Biden is still trying to win on the economy. In this video, what he's talking about is that companies are putting out less of a good, but for the same price. We've heard the White House complain about this. You know, 2 things that come to mind. Why would you remind viewers on the day of the Super Bowl that potentially there's less Oreos in their packet or less Doritos in their chip bag? And second, we heard from Unilever last week, which is one of these companies that has actually have said we're doing shrinkflation. We don't necessarily think it's a good idea, but the fact of the matter is we have higher costs and we are dealing with competition from local grocery store brands. So it's just reminding the American consumer that there is still an underlying issue of inflation.
And it raises this question, just even more so, why he didn't speak in a more candid, kind of loose, off-the-cuff sort of address other than this. He said he wanted to sort of not destroy the mood. People just want to have fun, et cetera. Sure. What do you think shrinkflation is? You know, I mean, does he think that's emboldening the move?
Shrinkflation is a Debbie Downer.
Is this resonating with voters? The answer is no. FT out with a poll together with the University of Michigan Ross School of Business. 42% of Americans said they felt Trump would be a better steward for the economy. Anne-Marie, 31% choosing Biden, 21% saying they trusted neither candidate.
We've seen this in poll after poll, including our own polling. When it comes to the economy, when it comes to handling of inflation, voters still think that they would be in better hands of the former president, though we need to remember the timeline might be on this president's side. What we have seen from the latest Michigan survey, the Conference Board, people are starting to feel better about the economy. I'm not sure if the president should have reminded them that some of their packaging has a little bit less crisps in them.
So that's the economy. Let's talk about foreign policy, shall we? Because that was the big headline over the weekend. Nikki Haley coming up a little bit later in the program. Get that in the diary. 7:30 Eastern time, so about 90 minutes away. AMH, the former president, with some controversial remarks on NATO and the former ambassador to the UN's husband.
That's right. So when it comes to NATO, we've heard this from Trump again, talking about, quote, delinquent NATO partners, pointing the finger at Europe. The issue is, Jonathan, for many, it feels like he crossed the line, saying he would tell Russia to go in on some of these partners that are not reaching their defense target. I was really struck by the reaction from the GOP. Some members of the GOP, like H.R. McMaster, who worked for the former president, telling the New York Times this is irresponsible. Lindsey Graham, though, Senator of South Carolina, saying, I don't even know why you're asking me about this. We know how he feels about NATO. Marco Rubio saying he's not a part of the Council on Foreign Relations. This is how he talks as a politician.
More on that coming up a little bit later. Here are the scores this morning, and good morning to you all. Equity futures on the S&P 500 totally unchanged, and the bond market yields down about a basis point or so, 416.18. Crude negative 0.75%, 76.25. And Lisa, we're all got an eye out this morning for the potential of another deal in the Permian, another big deal.
And it looks like it has just been announced that Diamondback is planning to merge with Endeavor in a deal that is valued at about $26 billion. This just sort of speaks to the consolidation that we've seen in the Permian Basin. You wonder how much some of the acquisitions by the likes of Exxon and Chevron have kind of accelerated this type of consolidation. We're expecting more of the same. We'll get more details coming up.
It's amazing, isn't it? Go through the names. Exxon acquiring Pioneer, about $60 billion deal. Chevron taking over Hess, $53 billion. Oxy purchasing Crown Rock for close to $11 billion. Have we completed the consolidation in that patch now?
A lot of people are saying no, but the big deals have been done, right? So now you can expect smaller mergers. The idea here is, first, you have an understanding of what it will cost to get it out of the ground, and then efficiencies of scale at a time, where there isn't going to be the same kind of focus on just getting more and more drills into the ground and more kind of production out on the other side.
The Diamondback's seeing that deal to close in the fourth quarter of this year, fourth quarter of 2024. Javier Blas of Bloomberg Opinion with us in about 25 minutes time on this deal. Look out for that. Coming up, Max Kettner of HSBC as the S&P 500 pushes past 5K. He'll join us in just a moment. Terry Haynes of Pangea Policy as Donald Trump takes aim at NATO, and Pooja Sriram of Barclays with the latest read on US inflation just around the corner. CPI drops tomorrow morning. Right now, though, we begin with our top story today. After closing above 5K for the first time ever, equity markets are kicking off the week at fresh all-time highs. Max Kettner of HSBC is cautious on the road ahead. We are more concerned about longer-run Fed rate expectations, which have risen over the last month. This has not inflicted any pain on the S&P 500. That could change. Continued rises in rate expectations are more likely to prompt a pullback in risky assets and safe havens too. I'm pleased to say Max Kettner joins us now for more. Max, let's get straight into it. You're calling it the reverse Goldilocks trade. You've started to see rates reprice. Equities, though, haven't budged. Why not?
Yeah, good morning. Look, I guess the rise in rate expectations and the rise in long-end yields hasn't really been enough yet. I think this is quite similar to where we've been in summer last year, right, where equities were rising significantly as well in May, June, and July. And at some point, the rise in yields was just too much. And then suddenly, actually, interest rate volatility was picking up. So the reason I think why it's really not hurt multiples yet, and why we've been sort of not really particularly bothered with lower than expected earnings delivery outside of the Magnificent Seven has been number one, of course, because of this tremendous earnings delivery of the Magnificent Seven, but number two in particular from a broader market perspective, because interest rate volatility is still very, very benign. And as long as that continues, that's not going to hurt equities and other risk assets just yet.
So Max, can you talk about how you're positioning at a time where there does seem to be this momentum? There is an increase in dividends. We saw Goldman Sachs come out this morning and increase their dividend expectation. You're seeing strength underpinning some of the ratcheting back of the rate expectations. So why wouldn't you be slightly bullish, even if you're concerned about go-go or row-row or whatever the new acronym is?
Yeah, look, I guess there can be too much of a good thing, and that's the concern that I have right now. Go back to where we were in the summer last year, right? Go back where consensus actually expected 0% GDP growth, and it ended up being 5%, right? Where earnings expectations were nowhere near what the actual earnings delivery ended up being, right? I think we started Q3 with sort of $54 on the S&P earnings, and it ended up being more than 58. So at the face of it, you should have bought equities. You should have been really, really bullish. But the problem, of course, was that a little bit of an uptick in inflation back then was already enough to inflict a bit more interest rate volatility and to send a bit of pain across the asset classes. Now, look, I'm not advocating for like the next 6 to 12 months things to be absolutely dire. No, but I do think with particularly also systematic investors, the likes of CTAs, risk parity strategies, volatility target strategies, all of those really running quite elevated equity exposure already that were a bit ripe for a pullback, and you want to buy into that pullback then. But for now, right, it's really hiding out in shorter duration stuff, short duration investment grade credit, in things like low beta rates, right? So out of the higher beta stuff like gilts, like BTPs. Within equities, it's the short duration, the cyclical markets actually, things like Japan, things like Latin America. And we do still, given that positioning is very, very low, contrary to equities, we do still like really commodities and in particular energy here.
Yeah, that's where I wanted to go. This idea that the only diversifiers can be found, you wrote this, in oil, energy, and some commodity markets. Why do you say that at a time where that trade seems to have failed and a lot of people talk about an oversupply from the U.S. relative to demand?
Yeah, look, when we look, for example, at the performance picture between, let's say, the September and the November FOMC meetings, what happened was that virtually all the asset classes went down, whether that was in rates, whether that was investment grade or high yield credit, whether that was in equities. So really, almost everything went down with this little bit of tiny whiff of hawkishness from the Fed back then. Whereas what that happened between the November and the December meetings, that was the exact mirror image that everything was swept higher. And commodities was sort of doing its own thing, particularly oil, right? You mentioned the supply picture, but I do think when we look at, for example, US supply, that's very much baked into the cake now. Whereas when we look at it from an investment perspective, yes, the front end of the curve has gone more into backwardation, so long positions are much more attractive now. The demand picture actually is kind of fine, and now we're starting to see signs of inventory restocking again, manufacturing globally starting to pick up, and that generally really argues for commodity exposure, cyclical commodity exposure anyway. And then when we look at broader commodity positioning, it's close to all-time lows. Energy positioning, net longs of managed money, non-commercials is close to 10-year lows, right? So it is, like you said, a very, very unloved trade that we would be very happy to jump on rather than now chasing the magnificent 7 higher.
Max, just to wrap it up, going into CPI tomorrow, I think a lot of people are still comfortable being long risk, even as data surprises to the upside, because as far as they're concerned, there is little evidence that stronger data is derailing the disinflationary trends of the last 6 months. Do you anticipate they're going to be wrong in the next several months?
Yes, I do think so. Not because I think the data necessarily will show a massive, massive second inflation wave, right? I don't think it will show that we're suddenly going to see core inflation going from 3 to 6% again. No, but because the starting point in inflation expectations, in short-term inflation expectations, is so much more dovish now, right? That means we only need a little bit of what we had last summer. Remember last summer, headline inflation just went from 3 to 3.4%. And even that, which at the end of the day was just base effects falling out of the 12-month window, but even that was not only enough to freak out the market, but even to freak out was enough to freak out the Fed, right? Even the Fed was adding one additional hike in December. So all we need is a tiny whiff of less dovish data, and it, I think, would already be enough to send a bit of pain across all the asset classes.
Inflation data tomorrow morning, 8:30 Eastern Time. Max, it's good to see you, sir. As always, Max Kettner there of HSBC, looking for reverse Goldilocks, Bramo, to hit this equity market.
You know, one of the key questions, and actually Savita Subramanian wrote about this late last week from Bank of America. If the Fed doesn't cut rates, or if inflation is just a touch higher than people expected, does that kill the equity rally? Max says yes, Savita Subramanian says no. And ultimately, that's one of the key questions underpinning this market right now.
And right now, that's what makes a market. Equity futures totally unchanged on the S&P 500. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Diamondback Energy and Endeavor Energy Resources are set to merge in a deal that's valued at about $26 billion. The new U.S. oil and gas production giant would be valued at over $50 billion. It is just the latest in a wave of consolidation in the energy sector. Exxon and Chevron both made major acquisitions over the last 12 months. President Biden's re-election campaign has launched a TikTok account. It's the first time Biden has joined TikTok in an official capacity. The Chinese-owned app has been embroiled in controversy in Washington, where government employees are banned from having TikTok on their agency-issued devices. The move is part of a broader strategy by the campaign to reach younger voters on social media. And the Kansas City Chiefs have been crowned the first back-to-back Super Bowl champions in 19 years. The Chiefs defeated the San Francisco 49ers by 25-22 in overtime. Quarterback Patrick Mahomes was named MVP. Taylor Swift, of course, did make her much-anticipated appearance. She cheered on boyfriend and tight end Travis Kelce. That's your Bloomberg Brief. John.
Hey, Danny. Thank you. Honestly, I understand the entertainment value of it, but what was that fuss about, her making it in time? She had hours and hours to spare. I think she had a night to go to sleep at home before even making it to Vegas.
People just wanted some drama. They want to understand this is a movie.
And that's how they manufactured it.
They manufactured it in every level.
I think people saw the dates and then didn't put into account the time difference between Japan and the United States. But yeah, this felt like pure entertainment. But this morning, USA Today says for all those people saying there's too much Swift, she was on all of 55 seconds during how long is this? 4.5 hour Super Bowl?
It feels that way.
No, that
4
is.
hours.
4 hours.
Honestly, it was commercial.
Every
Commercial.
That's why people watch.
I know, for the commercials. We can talk about the commercials a little bit later. I know you've got views.
Yeah,
I know you've got views. Up next on this program, Trump taking aim at NATO.
One of the presidents of a big country stood up and said, well, sir, if we don't pay and we're attacked by Russia, will you protect us? No, I would not protect you. In fact, I would encourage them to do whatever the hell they want.
Reaction to those comments up next, live from New York City this morning. Good morning.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
and was going to keep reading World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Equities on the S&P 500 totally unchanged this Monday morning after closing above 5K for the first time ever on Friday going into the weekend. Yields are a little bit lower this Monday. We're down a basis point or two, 415.99. Under surveillance this morning, Trump taking aim at NATO.
And I said, you got to pay up. They asked me that question. One of the presidents of a big country stood up and said, well, sir, if we don't pay and we're attacked by Russia, will you protect us? I said, you didn't pay? You're delinquent? He said, yes, let's say that happened. No, I would not protect you. In fact, I would encourage them to do whatever the hell they want.
Here's the latest this morning. Donald Trump's comments over the weekend stirring up backlash from world leaders. Terry Haynes of Pangaea writing this: a world in which the declining influence of US foreign policy is not only happening, but is on active public display, is a world in which geopolitical risk rises for markets. Terry, I'm pleased to say, joins us now for more. Terry, let's go straight to those comments from the former president over the weekend. I won't get into the motivations. That would require you to get into the head of the former president. Let's talk about the consequences. What do you think the consequences are?
Well, I think the consequences are that it makes people very nervous. And I think, frankly, and I'm not meaning to dispel the nervousness, but I think it makes people more nervous than they should be. If you want an indication of the true intent of the United States establishment, you have no further to look than the National Defense Authorization Bill that was signed into law a couple of months ago that requires congressional approval before you leave NATO. So what you've got here is essentially Trump red meat that's designed to amplify an isolationist message. That's all well and good, but it doesn't match up with either the intent of Congress. It doesn't match up with the intent of the broad intent of the American people either, frankly. You have not only pretty much united support for Israel, but you've got 3/4 of the House and almost all of the Senate supporting Ukraine as well. So there's a real disconnect between what Trump is saying and what the United States government thinks and feels and acts on.
But Terry, we've seen at times Republicans get in line behind the former president, most notably with the border deal. Is it concerning to you that Republicans will line up and become softer when it comes to NATO?
I think it's a risk. Right now, I don't think it's more than a trailing risk, frankly. As I say, I think the vast majority of Congress is in favor of supporting Ukraine, supporting Israel, supporting what I think of as the global leadership obligations of the United States. I don't think that's going to change markedly. I think we're at a moment now where a lot of individual members and senators are looking at their own bases. I mean, they're not thinking about Trump. They're not thinking about national. They're looking at their own bases and saying, okay, kind of how do I navigate through this particular shoal? And what you're going to see is you're going to see things that look like more support for the Trump position than they actually are. And, I think that's a mirage largely.
Terry, you mentioned the foreign policy aid bill that cleared a critical hurdle in the Senate over the weekend. What's its chance for survival in the House?
Oh, I think it happens in a couple of weeks. I think the House ends up having to bumble through this. If you proceed from the assumption, as I do, because this has been demonstrated in votes, that about 3/4 of the House supports Ukraine and I think therefore supports Ukraine aid, I think the House Republican leadership, which controls the ability to put things on the floor, is going to come under an awful lot of pressure. There's a couple of and it's going to have to spring this bill loose. A couple of ways to do that. One of them is to use a special suspension calendar that requires 2/3 of the overall House. You saw that used just a couple of weeks ago in the tax bill. The other way to do this is to employ what's known as a discharge petition, a simple majority of members of the House requiring that a bill be brought to the floor. I think generally speaking, I think the House Republican leadership would prefer not to be embarrassed further after the many embarrassments that they've brought upon themselves just in the last week or so. that's not foolproof, of course. They might prefer to be embarrassed more, but I think in the end, this gets done.
There's a question about the potential volatility also because neither of the candidates for president are well liked. Over the weekend, the White House really tried to push back against the special counsel report, calling it a cheap shot, saying that the special counsel was trying to score political points. What do you make of the rebuttal from the White House?
I think it's, you're all familiar, I'm sure, with what's known as the Streisand effect, where Streisand complained to Google Earth that her house was in view, and of course everybody started to look, even further at the Streisand house to make sure that they could see it. I think you've got Streisand effect going on here. The White House continuing to protest. Goodness, they even sent out a fundraising letter over Jill Biden's signature, Mrs. Biden's signature, over the weekend a couple of times, protesting all of this. Look, this was a disaster for the White House, and it's an ongoing disaster for the White House, and they're going to have to deal with it. They can't deal with it by denying it. Secondly, you've got a situation where, the good news is they've got 9 months to deal with it. Thirdly, I do think, for what it's worth, that the special counsel piled on. Special counsel could have said what he thought about the reasons not to prosecute without going into what amounts to opinion. But it's out there and it's done. They're going to have to deal with it, but they can't deal with it by denying it, or as one pundit put it over the weekend, hey, the good news is Biden's been making gaffes for 40 or 50 years, so nothing new about this. Happy talk.
But Terry, do you get the sense that there is a greater chance of another Democrat coming in to take his place in the election?
No, it is not. The Democratic primaries are not set up for that. What it's going to take is, so Biden rolls on. There's no serious Democratic opposition. What it's going to take is, by the time you get to the convention in the summer, you're going to have to end up with rogue delegates. You're either going to have to get some further change in Biden's condition, or a bunch of rogue delegates saying, you know what, we're not doing this. I don't care what the rules say.
Hey, Terry, great to hear from you. Terry Haynes of Pangea Policy, just perfectly framed about the situation in Washington, D.C. and for the nation. The president rolls on, seems to be the takeaway from Terry.
Which is sort of the reason why a lot of people are wondering what's actually going to happen in November at a time where it's, I don't know how you can explain what's going on right now. They're basically, he said, the Streisand effect. I mean, it was sort of this over the weekend talking about this, denial that just put more focus on concerns that a lot of Americans have right now.
So the questions are now going to become, which is potentially why you have to think the White House thought we are not doing a Super Bowl interview if they potentially thought this was going to be one of the top questions, because it continues to be on top of voter minds, is that you're going to look now for those gaffes. Yes, he's been making gaffes for 20, 40 years, but now they're going to become more apparent because the special counsel said they think he's a well-meaning but elderly man who has issues with memory.
It's hardly a great message to send to the electorate, isn't it? We've been doing these gaffes for the last 20 to 40 years. They shouldn't matter now. It's not a great message.
Again, it's sort of, why isn't he addressing the real issue, right? Why isn't he coming out? There was speculation about why he didn't go to the Super Bowl and give that interview. Releasing a video doesn't put those concerns
on
to rest.
shrinkflation.
Yes, exactly.
Yeah, I'm not sure how powerful that is either. Here's the situation. You've got potentially a former president undermining the collective defense clause of NATO. One, you've got the focus on President Biden on his mental acuity. Two, and you wonder how this shows up in the polls. I'm not sure the comments on NATO make a difference to the polls whatsoever.
No, and this is the issue. Does you get people just staying home? Do you get people more emboldened, or do you just have a resignation to a reality that a lot of people don't want?
The conversation continues. Equity futures unchanged on the S&P 500. Live from New York, this is Bloomberg.
think this will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
What happened was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you know, you got to be smart about this.
Four-day winning streak on the S&P 500 through Friday, coming into Monday. Equity futures right now look like this. Good morning to you. Unchanged on the S&P. Unchanged on the S&P. On the Nasdaq, slightly firmer, positive by almost 0.1%. Closing above 5K for the first time ever on the S&P 500 just last Friday, stringing together a fifth week of gains. The team here at Bloomberg doing the counting, so I don't have to. It took 719 sessions, Lisa, for the index to set its latest 1,000-point milestone, a gain of 25%.
Basically, what we're talking about is the unloved rally that was driven by a small select group of stocks. And so here's the question. Is this something that's momentum that you cannot fight against, or is it something that is looking a little frothy and set for a pullback if people look at inflation and see maybe the rate cutting expectations are a little too far advanced?
You know what was impressive, though, is that we've pushed back against those rate cut expectations, and still this equity market is looking all right. Go to the bond market, take a look at the 2-year. Down about a basis point today. Your yield on a 2-year at the moment, 446.75. But the 2-year had another soft week last week. The yield climbed by more than 11 basis points. The data was pretty strong, Lisa. ISM services, jobless claims a little bit lower. The pushback continued by Fed officials. It was reinforced by the information we had looking at economic data in America.
That's why I really related to this question that Savita Subramanian asked. With a rate cut in March likely off the table, some are asking, what if the Fed doesn't cut this year? And she says stocks can still gain. I wonder how much this has to do with dividends, how much this has to do with buybacks. Goldman Sachs talking about how everyone was increasing their dividends and buybacks. We saw this with the latest energy deal as well. Here is the question. Are stocks the new income play at a time where bonds are subject to potentially, price risk and inflation risk?
In a word, earnings. Bloomberg Intelligence. This number's incredible. The Magnificent Seven are projected to post combined profit growth of about 55% in the fourth quarter.
I mean, that's the thing. They're real. So when people say this is another 1999, other people say, really? It's not just, a sort of a placard with nothing behind it and 15 employees who are hoping to pay themselves with debt.
Who are you suggesting that was? 99?
Yes, I'm just saying that there's not this feeling of like a shell company that's going to go bust.
Yes, it's real.
It's real.
It's real. NVIDIA earnings, by the way, next Wednesday, I believe, 2 Wednesdays away. Let's turn to foreign exchange off the back of that bond market move. I was just trying to work out who that was a rant about specifically. The euro, 107.70. That currency pair negative here by 0.1%. Under surveillance this morning, here are your top stories. 2 hostages are free after an operation by Israeli forces in Gaza. Israel is ramping up strikes in Rafah near the border with Egypt as Prime Minister Benjamin Netanyahu vows to continue the military campaign. According to the White House, President Biden spoke directly with the Israeli leader yesterday. Biden telling Israel not to proceed without, quote, a credible and executable plan for the safety and support of civilians. Anne-Marie, it's worth talking about Rafah in the southern part of Gaza. This is where many civilians had fled to after this conflict started.
This is where more than 1 million Palestinians have taken refuge. They moved south. The Israelis told them to move south, and that is why this has become an issue that not just from the White House, but capitals around Europe are saying they are incredibly concerned about the safety of these people. What struck me this weekend in my readings, what the Wall Street Journal reported, Egypt, which is a mediator in these talks, has warned Hamas that it needs to reach this accord about the hostages about 2 weeks, or Israel will proceed with the Rafah invasion, which I believe we already saw the start of that overnight.
Much harder stance coming for the President of the United States. And Lisa, given where the polls are right now for President Joe Biden, you'd imagine an even harder stance is going to come in the weeks and months ahead.
Especially because privately he's been telling a lot of his aides that he really disagrees with Netanyahu, the Prime Minister of Israel, and that he actually thinks that he's not necessarily being as reasonable as he would like, and he doesn't really have as much influence. Question is why he hasn't gone public with that. Especially because Netanyahu is not popular in Israel. And a lot of people think that he's more extreme and not protecting the nation.
We did see some of that, though, creep out from Biden last week when he said he did think of what Netanyahu was doing was, quote, over the top. So a little bit of that frustration is starting to come out. But I agree with you, Lisa. The frustration is palpable behind the scenes.
The focus is back on the Pentagon. Defense Secretary Lloyd Austin is back in the hospital. He was admitted to Walter Reed National Military Medical Center last night for symptoms suggesting an emergent bladder issue. His doctors saying, quote, at this time, it's not clear how long Secretary Austin will remain hospitalized. Austin's duties have been transferred to Deputy Defense Secretary Kathleen Hicks. Some real concerns about his health at the moment.
Absolutely. So 2 things notable about this. One, the DOD came out immediately to say that he was being transferred to the hospital. So they clearly learned their lesson of what happened prior when they were less transparent, and even the White House was confused. Second, they also came out after he was transferred to the hospital about 2 hours later saying that he's not in enough of a stable condition where he can continue his duties, so they were able to transfer them. But a lot of concerns. This week alone, he's supposed to have 2 meetings in Europe, one regarding Ukraine and the other regarding NATO defense.
There is far more transparency this time around, that's for sure. Let's finish on a lighter note. The Kansas City Chiefs are repeat Super Bowl champions after an overtime victory over the San Francisco 49ers.